the presentation. Let us start with the presentation now. Yeah. So what are the amendments made by Finance Act 21? My dear friends, Madam Nirmala Sitharaman, in para 170, what she's telling, see the budget speech of the finance minister, telling relief to small trusts. We hope to reduce compliance burden on small charitable trusts, running educational institutions and hospitals. So far, there is a blanket exemption to such entities whose annual receipt does not exceed 1 crore. I now propose to increase this amount to 5 crores. So all of you know 10 within bracket 23C. Proviso, you know that 10 within bracket 23C, you know, for educational institutions and charitable trusts. What was the limit earlier? The gross limit was 1 crore. When did this limit come? This limit came 30 years back, members. 1990, the limit was set. After 30 years, they have increased the limit of 1 crore to 5 crores. It took the government 30 years. Why? Lot of representations received. From whom? Basically, all the education institutions, hospitals, colleges, schools, etc. belong to all politicians. Lot of politicians went to madam. Lot of representation went to madam. After 30 years, madam has increased the limit of 1 crore to 5 crores. We'll see the provision. Now, I told you that is 1023C 3AD and 3AE. What is 3AD? 1023C 3AD subclass. It is applies to your gross receipt of university or educational institution. Similarly, 1023 3AE, 3AD, 3AE will apply to hospitals or educational institutions, and as prescribed in Rule 2BC, the limit was 1 crore. Now, representations went to finance minister. Finance minister was finally convinced, and after 30 years, the amendment has been made that 1 crore limit has now gone to 5 crores. Now, what are the issues here? How to calculate annual receipts, sir? How to calculate annual receipts? Gross annual receipts? What is annual receipt? It is not defined in the act. So you have to, take all the receipts, your voluntary contributions, your bank interest, etc. Whatever comes to your, income and expenditure account, profit and loss account, you take all that as gross receipts, and then you calculate the limit. Earlier it was 1 crore. Now from 1st of April 22, which is applicable for assessment year 22-23, it will be 5 crores. So that is the meaning of annual receipts. Now, earlier it was per institution. Very, very important amendment, members, understand carefully. It was per school, per college, per educational institution, per hospital. Now it is per person. So limit of 5 crores is per person. Earlier limit of 1 crore was for per hospital, per hospital or per educational institutions. For example, RK group of institutions. Take Rashtrakuta group of institutions. It had 5 colleges or it had 6 colleges. So earlier, how was it? Each college, I used to see whether the limit is less than 1 crore, and then I would have calculated. Now they are telling Rashtrakuta group of institutions as a whole, the limit should not cross 5 crores. Okay, it is per person. Earlier it was per institution. So that is one more amendment which has been made in the statute. Now, these are all the other amendments in the memorandum. We will see. So the first amendment is what, that threshold limit for availing exemptions without applying for approval increased for educational institutions and hospitals from 1 crore to 5 crores. So earlier it was 1 crore, and from next assessment year onwards, we discussed that it is 5 crores. Up to 5 crores, there is no need for taking any approval, members. No need of that 85%, no need of audit, no need of, that 85% you have to spend. Nothing is required. Just, you have to file the return, ITR 7, that's all. Now, next amendment, we will see. Yes, sir. Yeah. Now, I told you meaning of annual receipts was not defined in the act. So therefore, we'll have to look at judicial precedents. Now, Madras High Court in Madarsa Baqiyatul Salihat Arabic College, what it held that sale proceeds of land and bond could not be equated to annual receipts while considering the monetary limit on 1023C 3AD. That is for educational institutions and schools and colleges, as the said sale was in nature of conversion of capital asset from one to another. Similarly, the Jaipur Tribunal Indian Medical Trust held that annual receipt is to be considered without excluding contribution towards the corpus of the trust. Now, 5 crore limit to be applied in aggregate and not as per institution. We discussed that. Nothing to worry. Now, what happened? Earlier, we told you, the various court rulings provided that limit of 1 crore available for each of the institution run by an organization. However, there were contrary rulings as well. Now, some of the rulings which affirm this view that what it is per institution. So, famous judgment of Karnataka High Court in Children's Educational Society, 34taxman.com 285 and rendered in 2013, Karnataka High Court held that if an assessee is having more than one education institution, then the aggregate annual receipt of each such educational institution has to be considered separately. If a trust is running 5 educational institutions, then each of such institution will enjoy the 1 crore limit. Similarly, Chennai Tribunal held in PKD Trust that each educational institution should be considered separately for applying the threshold annual receipt of 1 crore for allowing exemption under section 1023C. Similarly, Delhi Tribunal in Shiksha Samiti rendered in 2015, ITIT Delhi Tribunal held that exemption under 1023C 3AD aggregate annual receipts refers to receipts by a particular institution. So all these are negative now. All these have been overturned by the amendment made, my dear friends. The amendment made, there are certain wordings in the section itself. It is all clear. Finance Act 2021 has overruled these judgments. 21. Finance Act 21 substituted the words receipts of such university or educational institution with receipts of the person of such university, educational institution, now substituted with receipts of the person from such university or universities or educational institution or institutions in subclass 3AD or subclass 3AE. So the word such university or education institution is substituted with only now person, receipts of the person. So person, under that person, Rashtrakuta group of institutions, I told you it has got 10 institutions. So overall aggregate now, see the limit. Further explanation is also inserted to clarify that if a person has receipts from educational institutions as well as from medical institutions referred to in 3AD, 3AE, exemptions under these clauses shall not apply if the aggregate of annual receipts of the person from such educational and medical institutions exceed 5 crores. Fine, sir. Now, there was this one judgment in favor of the department Amritsar ITAT in Vivekananda Society of Education and Research. So now the amendment made by the Finance Act 21 has now affirmed the ruling of Amritsar ITAT, wherein the tribunal held that if the receipts of an assessee society from 2 institutions managed and run by it exceeded 1 crore in the absence of exemption certificate under 1023C, receipt was rightly brought to tax. The tribunal is telling you have got 2 institutions, all right, and the receipt are more than 1 crore. Therefore, you should have taken approval in 1023C. You don't have approval in 1023C. Therefore, you are not coming under exemption. I am not going to give you a blanket exemption now. Now, next amendment. What is the next amendment? Investment of corpus donations in the mode specified in 11.5. Now, what are they telling? Voluntary contributions received with a specific direction that they shall form part of the corpus. Already, it is there. 11.1D, it is exempt. Now, that section has been further stretched. Already, you received voluntary contributions with a specific direction that they shall form part of the corpus of the trust. Now, the section is stretched, my dear friend, telling that it will be exempt only when it is invested in 11.5 modes. Investment of that corpus fund, please make it in 11.5 investment modes only. The section is now stretched. Merely just receiving a letter from the donor or giving a receipt to the donor telling that, okay, fine, you have received a corpus donation with a specified direction that it shall form part of the corpus of the trust is definitely corpus donation, exempt under 11.1D of the Act, but nonetheless, it should be invested only in 11.5 investments mode. So explanation to third proviso is inserted to 1023C. It's already there. 1023C explanation third proviso stating what? That the income of a fund or trust or institution or university or educational institution or hospital shall not include income in form of corpus donation. So even for 1023C, my dear friends, already explanation was there. Explanation to third proviso, it exempts to 1023C. Corpus donation are exempted in case of hospitals and educational institutions. Similarly, in case of 11(1)D, corpus donations also will not be included in the total income. Now, what amendment is made by Finance Act 2021 is that corpus donation shall now be deposited or be invested in any one of the mode specified under 11(5), maintained specifically for such corpus. So it is crystal clear now. The corpus donation received by an organization will not be treated as exempt income unless it is invested or deposited in one or more of the forms or modes specified in 11(5), maintained specially for such corpus. Now, again, what are they telling? The corpus fund, to the extent created out of corpus donation received under 11(1)D has to remain invested as per 11(5). Now, what about a trust may be carrying on business 11(4) and 11(4)A, incidental to business, incidental to the objectives of the trust. The business is incidental to the objectives of the trust. So therefore, which corpus? If it is out of the corpus of the business or out of the corpus donation received under 11(1)D, only corpus donation received under 11(1)D has to remain invested as per 11(5). If there are other corpuses, I will not invest in 11(5) mode. What corpus should be invested? What corpus is exempt? 11(1)D as well as explanation to third proviso to 1023C. I will restrict myself to these sections only. So the condition of investing the corpus fund in section 11(5) investment, my dear friends, shall apply only to that part of the corpus fund which has been created from the corpus donation exempted under section 11(1)D. Because as I told you, organizations may have corpus funds invested in business assets on 11(4) or 11(4)A, which do not conform to the requirements of 11(5). Further, a charitable organization can also be created with a corpus property, which also does not conform to requirements of 11(5). Now, so the sources from which a corpus fund can be created, there are many sources, One is your corpus donation received with a specific direction. That 15% accumulation, what you are claiming after applying 85% of income. Then by payment of taxes, for example, an organization pays taxes against anonymous donations above 5%. Then at the time of creation of a trust, the corpus may come as a cash, property, or even business. Similarly, corpus donation from any other exempt income, not subject to an application under section 11. So basically, what corpus donation? Only those corpus donation which is exempt under 11(1)D has to remain invested as per 11(5). Therefore, such fund cannot be used for incidental business activity, which is possible with other corpus funds. Now, what happens? What happens practically? I withdraw that corpus fund, which is invested in 11(5) investments, and I spend it on my capital expenditure or I spend it on my revenue expenditure. Law is telling, wait, next year you replenish that 11(5) investment, refill the corpus. What you have withdrawn today, anyway, corpus fund you have to specific direction only, specific direction of the donor, which shall form part of the fund. For specific purpose only you have to use. If I have utilized for the revenue purpose or capital purpose other than the corpus fund for what it was received, law is telling, wait, don't worry, I will not allow as application in this year. Fine. Next year, you refill the corpus. Refill the corpus. What you have withdrawn, refill the corpus. I will allow you as application. In statement of total income, then you please claim as application. There is no problem. Law is allowing you that. Now, but they are not telling me now. What are they telling me? The one more issue is, you are telling me to put in corpus, whatever corpus fund I have received, you are telling me to put in 11(5) investments. How long shall I keep it? 3 months, 6 months, 1 year, 5 years, 10 years? It's not mentioned, sir, anywhere. So what we will do? Tax planning will come. They will keep for 1 year. Next day they may withdraw. Again, that 11(5), they may liquidate. We don't know. So there, the board has to clarify. They have to tell. There is no specific amendment regarding the consequences if the investment made out of the corpus donation is liquidated in the subsequent year and not reinvested. In such a situation, the amount realized should be treated as income subject to application. Otherwise, the amendment will be negated. So what you have to do, my dear friends, practically, keep 2 accounts now. Corpus donation, and then corpus donation before your 21, corpus donation after 21. So before March 21, after March 21, you have to create 2 corpus donations. Earlier corpus donations, I am not bothered. You claimed as exemption. You need not invest in 11.5. I am not bothered. It's anyway exempt 11.1D. Similarly, third proviso 1023 is exempt. But after March 21, my dear friends, you have to be alert as of today. Whatever corpus you receive, my dear friends, as of today, advise the educational institution, advise the hospitals, advise all charitable trusts who are claiming exemption under 12A, who are claiming exemption 10 within bracket 23C, 3AD, 3AE. For heaven's sake, please invest in 11.5 investments and don't take the risk. Withdraw next year, and again, just because they have not given the time limit, that risk also we should not take anywhere. Now, this restriction on the application out of corpus donation, we discussed that. So what is the amendment now? Application out of the corpus shall not be considered as an application for charitable or religious purposes for either third proviso of 1023C and clauses A and B of 11.1. Fine, sir? Then we discussed when it's invested or deposited back into one or more of the forms or modes specified in 11.5, maintained specifically for such corpus. From what? From the income of the previous year, not out of accumulated funds. It should be deposited out of the income of the previous year. Then such amount shall be allowed as an application in the previous year in which it is deposited back to the corpus to the extent of such deposit or such investment. That is the next amendment, my dear friends. Next amendment. Restriction on application out of loans and borrowings. Now, what was happening? See, we are all chartered accountants. We are expert in taxes. We are expert in accounts. So therefore, what we were telling. Now, for example, Mr. Ramesh, what he did, he is running a charitable trust. One of the trustees, they wanted to buy a property. They wanted to purchase a land and building. The cost of the land and building was 10 crores. 5 crores they had in their asset side. In what form? It may be, in bank account, it may be in FD, it may be lying in your bank account, etc. Another 5 crores, they borrowed loan. Mr. Ramesh borrowed loan. The trust, Ramesh Charitable Trust, he borrowed loan. So 5 crores he borrowed loan, 5 crores from their own funds of the trust, and they went and registered a property. Very good, sir. Immovable property, only for the objectives of the trust only. Now, what we are doing, 10 crores I am showing as liability on the asset side of balance sheet, bank loan. Okay, 10 crores. And 10 crores I am showing as land and building. What we were doing earlier. 5 crores I invested out of own funds, 5 crores I invested out of loan and borrowings. But I claimed, 10 crores as application on account of purchase of immovable property. Because in case of a trust, there is no distinction between the expenditure can be either revenue in nature or capital in nature. Application per se may be revenue, may be capital in nature. So we used to claim 10 crores as application. Very good, sir. Again, at the time of when I used to repay back the loan, I used to again claim as expenditure. 5 crores when I used to repay, again claim as expenditure. Janmabhoomi Case Trust, Karnataka High Court says they allowed. They told based on commercial accounting principles, I will allow in the year of investment, 10 crores I allowed as application. After 5 years, I repaid the loan. When I repay the loan of 5 crores, they are again allowing as an expenditure. So department raised the issue in High Court, sir. You cannot allow repayment of loan as an application. Why? Department argued in front of Honorable High Court of Karnataka in Janmabhoomi's trust case. When the loan was received, my dear honor, when the loan was received, did you show it as income? No. Department's argument was when the loan, receipt of loan, have they shown as income? So similarly, don't allow repayment of loan. But the court told receipt of loan under no circumstances can be treated as an income. Anyway, now that judgment is also overturned, and my dear friends, amendment is made lock, stock and barrel, even in 11.1 now. What is the amendment? Don't teach me accounts. The law is telling me I don't know accountancy. Don't tell me all these accounts. When I'll allow application? When will I allow as an expenditure? At the time of repayment of loan now. So Ramesh Charitable Trust, Mr. Ramesh Trustee, 5 crores own funds, 5 crores loan funds. I am not going to allow, sir, when you make an investment. I will only allow as application or expenditure at the time of repayment of loan, including interest, sir. No problem. You repay the loan plus interest, I'll allow as expenditure. No question of allowance of application at the time of investment in property. The law is now crystal clear. So now what are they telling now? Finance Act 2021 has made an amendment that an application from loans or borrowings shall not be considered as an application for charitable or religious purpose. However, when such loan or borrowing is repaid from the income of the previous year, such repayment shall be allowed as an application in the previous year in which it is repaid to the extent of such repayment. Now, so application from loans and borrowings, very much clear, sir. I borrowed the loan, I invested in building. Not allowed that. Don't even claim even by mistake. Application from loans and borrowing shall not be considered as an application for charitable or religious purposes. That is for accounting, you do whatever you want. In STI, you can't claim as application. Shall not be considered as an application for charitable or religious purposes for the purposes of third proviso of section 1023C and clauses A and B of 11(1). Now, organizations, what they used to do earlier now? Are used to claim expenditure made out of the corpus fund or borrowed funds as an application of current year income. After the amendments, the application towards charitable purpose shall now be divided into three broad categories: application out of current year income, application out of corpus or unconditionally available funds of the organization, and application made out of loans and borrowings. After the amendment, no application other than an application made out of income shall be allowed to be claimed in income and expenditure account. Very, very clever, sir. What are they telling now? The next amendment here. This restriction on set off and carry forward of past deficit. Now, what is this? You want to carry forward your expenditure, you should not be telling. You should tell excess application. Excess application in 1 year, you want to set off and carry forward against the receipts received in the next year. Very good, sir. How can you have excess application? How did you get excess application as chartered accountants? How did you get excess application? This is the question. It may be out of corpus. You used your corpus and you made an application. So corpus did not enter your profit and loss account and income and expenditure account. So you use the corpus. You used to claim application happily and or unconditionally available funds, or application made out of loans and borrowings. You took loans and borrowings, happily you claimed application. Why all these are resulting in excess application, excess expenditure, excess deduction? Actually, the word to be used is only application. But to make you understand, how did you get the source? How can it be excess, sir? You are using the corpus. You are using the loans and borrowings, etc. And you are also using that 15%, although you have not spent, 15% exempt without having spent under 11(1)(a). So now they are telling nothing doing. Why? There was no provision in Income Tax Act or in the form ITR 7 till today. Till date, there is no provision in 11, 12 and 13 stating what? That the deficit of 1 year can be set off against the receipt received of the trust in the next year. No provision in the Act. Neither was there any column in the form. Then there were 12 High Court judgments, sir. 12 High Court judgments in my favor, telling that yes, excess application you can set off for carry forward against receipts of the trust in future assessment years. Now, 12 High Court judgments plus a Supreme Court judgment came in 2018. 96taxman.com 652 in Subro's Educational Society. In this, what happened? The assessee filed a return of income declaring a deficit. As usual, assessing officer disallowed the carry forward of deficit. Then, upon the second appeal, the tribunal, following the ratio of Rajasthan High Court in CAT versus Maharana of Mewar Charitable Foundation, held that deficit should be allowed to be carried forward for adjustment in the subsequent year. Tribunal allowed the appeal of the assessee. Again, department's appeal was dismissed by the Delhi High Court. Then, the question before Supreme Court. The following question was raised by Tax Department before the Supreme Court: whether any excess expenditure incurred by the trust charitable institution in earlier assessment year could be allowed to be set off against the income of the subsequent years by invoking section 11 of the Income Tax Act 1961. Supreme Court heard the applicant on the aforesaid question and did not find any merit therein and dismissed the application. So the Subros Educational Society was in favor of the appellant. Even Supreme Court sided with the appellant. But no amendment in the law, sir. 11, 12, 13. No amendment. Again, in the columns of the form, no amendment. Where should I fill up? Anyway, now the issue itself is settled, telling that the Supreme Court judgment itself is overturned now. Now, Supreme Court actually what happened? Controversy was settled by the Supreme Court in the favor of the SSC, and consequently charitable institution was held to be entitled to carry forward and set off the excess application of income of earlier years against income of subsequent year. But now judgment is overturned by the amendment made in law itself. Earlier judgments also have given for your benefit. Plot Shwetambar in Gujarat High Court, Institute of Banking Personal Selection in Bombay High Court, Matri Seva Trust case in Madras High Court, Raghuvanshi Charitable Trust in Delhi High Court, my own Karnataka High Court in case of Ohio University, Christ College, etc. But now, amendment is made, my dear friends, in 10 within bracket 23C as well as section 11, stating that for computation of income required to be applied or accumulated during the previous year, no set off or deduction or allowance of any excess application of any of the year preceding the previous year shall be allowed. Therefore, pursuant to this amendment, charitable trust shall not be permitted to carry forward losses or excess application of the earlier years. In any year, if there is a deficit, that is your excess of expenditure or income, it would imply that the organization overspent from either borrowed funds or its corpus. We decided that, so fair enough. Borrowed funds and your corpus already you claimed exempt. Again, you want to claim from corpus application and show a deficit, again set off that deficit against the income. All double claims, sir. Now not possible. Again, change in due date for filing of belated ITR. So all of you went, we are all experts in what? In requesting the finance minister for extension of time. My dear friends, I humbly, request all the members to stop this practice. First, they went to finance minister. You know what happened? Audit, what she did? It became from 5 crores to 10 crores. Why? That 95% of receipts and 95% of payments. They increased. Oh, you are all busy chartered accountants, so you are all very busy people. They increased the time limit now. Again, you went for request. GST audit was removed from the statute. Again, you went for request. Now, what have they done? Time limit for filing belated ITR has reduced by 3 months, my dear friends. Please be careful unless the times are extended now. Due date for filing this year's returns only Finance Act 21. Amendment is made 31st of December. After 31st of December, there is no work in CA office. Why? You can't file revised return. You can't file belated return. You can't file original return. Even scrutiny, my dear friend, time limit is reduced under 153 subsection 1, 153 subsection 2. Even intimation time limit is reduced 143 subsection 1. What was time limit for passing intimation? Earlier 12 months from the end of financial year in which return is filed. Now reduced to 9 months from the end of financial year in which return is filed. Similarly, time limit I told you for passing assessment order under 143.3. In 153.1, the time limit is given. Reduced, what was it? Earlier it was 2 years. My experienced practitioners, you'll remember, earlier time limit for passing scrutiny assessment order was 24 months. Reduced to 21 months. Reduced to 18 months. Reduced to 12 months. Now reduced to 9 months. What is 9 months? 9 months will end at 31st December. So purely tax practice, you have no work, sir. 31st December, finish. It is over. You can't file a return. You can't revise the return. You can't file belated return. You cannot even, there is no question of even submitting scrutiny details. So therefore, be careful. Time limits reduced drastically. Now, Finance Act 2021 has reduced the time limit to file belated or revised return as the case may be by 3 months. Let them go, sir. Let the assessee go through his Chamber of Commerce. We have no problem. Having passed the toughest financial examination on this earth and become chartered accountants, it's not your job to go before the finance minister asking for representation for increasing time limit. Not my job, sir. Let the assessee go. Yes, you are well within your rights. Let the assessee go to the respective Chamber of Commerce. You prepare the presentation, you prepare the representation, give to them. You please go. We as chartered accountants, we will not go. Anyway. So the time limit is reduced now. It's already incorporated in the Act. Be careful. Belated and revised return reduced by 3 months. Therefore, now the last date to file revised or belated return shall be 31st December of the relevant assessment year. In case of charitable trust, also this amendment is there. That is why I have covered this amendment here. And that 1 month before you have to file the audit report, same thing. 1 month afterwards, you can file the return. So there, those guys, poor fellows who are filing the return, whose due date, if it's audit, if it is transfer pricing, October and November, by 31st December, they have to finish filing even revised return, sir. You have got only 1 month. So it may not be that fair. 30th September, you have finished your audit, or your transfer pricing case, 31st October, you have finished, or 30th November, whatever. By 31st December, you have to finish revising such return also. Where is the time limit now? Anyway, we are concerned with charitable trust 139(4)(a). You know that. Return to be furnished by trust or institutions. Those all entities who are registered on 12AA, earlier it was 12A, then 12AA, now 12AB. If the total income without giving effect to provisions of 11 and 12 exceeds the maximum amount which is not chargeable to tax. This is Income Tax Act for you. Simply they should have given it is more than basic exemption limit. This is what is Act for you. 298 sections in the Act. If the total income without giving effect to provisions of 11 and 12 exceeds the maximum amount which is not chargeable to tax. Simple, sir, not more than basic exemption limit. If it is more than 2.5 lakhs, what to do? Get the books of accounts audited in case of a charitable trust and file the return on 139(4)(a). Simple. Return of income shall be furnished by a trust or institution in accordance with provisions 139(4)(a) within the time limit specified under 139(1). We discussed that. Hence, after the amendment to claim an exemption under 11 and 12, return is to be submitted latest by 31st December of the assessment year, failing which benefit of 11 and 12 shall not be applicable. Obviously, you don't file the return, you don't file the tax audit report, your report in your report of audit in case of trusts, etc. What will happen? Obviously, the exemption will be forfeited. Now, so we discussed all these amendments of 21 Finance Act. Now we'll discuss the amendments of Finance Act 2020 and delve deep into the registration matters. Now, yes, sir. Again, FM budget speech of 20. Charity institutions. What is the, just go to the speech of the Finance Minister. Acknowledge para 124 of the explanatory memorandum of the budget speech. Acknowledging the important role played by charitable institutions in the society. Income of these institutions is fully exempt from taxation. Further, donation made to these institutions is also allowed as a deduction in computing the taxable income of the donor. Currently, a taxpayer is required to fill the complete details of the donee in the income tax return for availing deduction. In order to ease the process of claiming deduction for donation, it is now proposed to pre-fill the donee's information in taxpayer's return on the basis of information of donations furnished by the donee. It will become like your Form 26A, sir, even donations. Now the donor and donee. What are they telling? In order to ease the process of claiming deduction for donation, it should appear in 26 years, like how your TDS is appearing on your interest, on rent, on salary, etc. Similarly, the donation should appear in Form 26 years. If the donation is appearing, then they are telling you claim donation. What was happening, sir? Fraud was going on, sir, all over India. People are claiming 80G. You are just claiming 80G. You are telling, for example, 1 lakh deduction given to ISKCON. You put their registration number. Who is going to check? Pay ISKCON 1 lakh rupees. Put the registered number of ISKCON, 80G approval number of ISKCON. Put 1 lakh rupees and claim. Where the department checking? Unless it is scrutinized by the department, unless it is scrutinized and registration certificate is called for, or unless the books of accounts of the assessee are checked, they are just claiming the donations. Now they're telling we don't know. You would have paid by account pay check. You would have paid by banking channel. ISKCON is also registered in 12A. ISKCON is also approved in 80G. ISKCON may also be allowed, it is having intimation 35(1)(2), 35(1)(3). I don't know. Is it appearing 26 years? If it's appearing in 26 years of the donee, donor has to upload the details. It should appear in the 26 years of the donee. Is it appearing? I'll allow the deduction. Most dangerous amendments, sir, of this Finance Act 2020. Most dangerous amendment. Anyway, pre-filled donees information in taxpayers' return on basis of information of donations furnished by the donee. This would result in hassle-free claim of deduction for the donation made by the taxpayer. Again, further, in order to claim the tax exemption, I am just taking you through the Finance Minister's speech. So, what is the intention of the Finance Minister? Why are these provisions introduced? Further, in order to claim the tax exemption, the charity institutions have to be registered with the department. In the past, the process of registration was completely manual and scattered all over the country. In order to simplify the compliance for the new and existing charity institutions, I propose to make the process of registration completely electronic, under which a unique registration number URN shall be issued to all new and existing charity institutions. Further, to facilitate the registration of the new charity institution, which is yet to start their charitable activities, I propose to allow them provisional registration for 3 years. See the speech? Step by step. Now, these are all the memorandum. No problem. Then we will go to the amendments now. Now, one by one, let us discuss the amendments. Corpus donation received by Section 1023C institutions will be exempt from tax. What was the present position before the amendment made by Finance Act 20? We discussed that. Third proviso, corpus donation received by 1023C are exempt from tax. Now, that is the amendment made in Finance Act 20. Earlier, what was the position? If institution registered on 12AA receive any income in form of voluntary contribution with a specific direction that it should form part of the corpus of the trust or institution, it shall not be included in the total income of such trust or institution. 11(1)(d) was already there, sir. You're a charitable trust registered in 12AA and you have received corpus donation 11(1)(d). It is exempt. It will not enter the computation in the statement of total income. However, no such specific exemption was available to all those entities registered under 1023C. Okay. So therefore, now what was happening there? So 1023C, whatever corpus donation received was not exempted. In Finance Act 20, they brought in the amendment. Otherwise, what will happen? If I am not exempted, I have to spend that, sir. I have to spend 85% even of corpus donation to claim exemption, to claim application. Otherwise, what to do? Not those that 1023C, 3AE and 3AD, not those. Other than that 4, because that is limit is there for 1 crore earlier. Finance Act 21, it became 5 crores. Finance Act 20, it was only 1 crore, not those two. If the limit is more than 1 crore there, even they have to go for approval. So when they go for approval in 1023C, even those institutions, they are receiving corpus donation. They are telling nowhere it's stated that corpus donation are exempt. Therefore, by default, even I have to spend the corpus donation for the application. Then only application will be allowed for calculation of 85%. It's more than 1 crore. Now, however, no such specific exemption was available to entities registered on 1023C. Hence, it was always a matter of litigation compelling the institutions coming within the scope of 1023C to apply even their corpus donation for getting the benefit of exemption. So, you spend even the corpus donation. How can you build up the corpus, sir? I want to purchase land, building, etc. I'm not able to build my corpus because there is no exemption at all. So, I have to spend everything. Otherwise, they'll tell me to pay tax. So therefore, Finance Act 2020 inserted an explanation to third proviso to 1023C. This is Finance Act 2020, sir. Don't get confused. What we discussed was Finance Act 2021. But this amendment is made in Finance Act 20. Explanation to third proviso to section 1023C to clarify that corpus donation shall not form part of income of such institutions. Fair enough. It's already there in 12A. It's not there in 1023C. So they brought in explanation to third proviso. It has now been provided that any corpus donation received by such fund or institution or any university or other education institution, no problem at all, shall not be included in the income of the such entity. Hence, institutions or funds availing exemption under section 1023C now specifically get the exclusion from the requirement of mandatory application of income in respect of corpus donation. Therefore, now 1023C institutions and 12A, 12AA, 12AB institutions or charitable trusts are now on par with respect to exemption available and for corpus donations. Now, corpus donation not to be considered as an application of income. So, what was happening earlier? Any contribution by a charitable religious trust to any other trust registered under 12AA with a specific direction that it shall form part of the corpus of the recipient trust is not considered as an application for the donor trust. Very good, sir. What was happening earlier? 12A charitable trust is there. There is 12A, one more 12A charitable trust. So what they were doing? If 12A charitable trust give corpus donation to one more 12A charitable trust, earlier what was happening before this exemption? You claimed as application. Corpus I gave, sir. I claimed as application. I gave donation. That fellow, anyway, you received corpus. So anyway, you need not spend for charitable purpose for that 85%. Why? Because that is in form of corpus donation. So this fellow gave application, claimed as application, that whatever donation given as corpus, you received corpus. Recipient also claimed exemption. That fellow again gave to third person. So corpus, corpus, corpus. You are, hoodwinking the department. You are giving corpus, claim donation, claim application. That recipient is receiving corpus donation. I received corpus donation. I will not apply. I need not apply. Why? Corpus donation need not be applied because he is exempt. 11, 1D. Very good. So that fellow will give to next trust, corpus, corpus, corpus. All this is gone, sir. No. Now they are telling nothing doing. Corpus donation will not be considered as an application of income. Now, what they did? They introduced a 12th proviso to 1023C, saying that whatever contribution by a fund or trust or institution or your university or education institution or hospital or other medical institution as referred to in 1023C4, 1023C5, 1023C6, 1023C6A with a specific direction to the trust or institution registered on 12AA. It was there only in 12A, not there in 1023C. So again, they were enjoying 1023C to 12A trust. Now, what is the exemption? I mean, what is the amendment? Corpus donation by a 1023C institution to a 12A registered institution, it shall not form part of the corpus of the recipient trust. Consequently, it shall not be treated as application of the income of the donor. Okay. Currently, this restriction was only in respect of corpus donation made to entities registered on 12AA. So now it is clear. 12th proviso to 1023C. Sir, today there are 20 provisos, sir. 20 provisos to 1023C. Anyway. So 12th proviso is inserted. Any corpus donation by 1023C to your 12A registered charitable trust shall not be treated as application of income of the donor. Next. Now, similarly, they are telling Finance Act 2020 provides that corpus donation shall not form part of the income availing benefit of 1023C. Consequential amendment has also been made that the corpus donation by one such entity to another entity shall not be treated as application of income. So your 1023C corpus donations are exempt, no problem. You are receiving, you are the recipient 1023C, they are telling no problem, you receive corpus donation exempt. Similarly, whenever you also give corpus donation to 12A registered trusts, then also I will not allow as application of income. So in other words, corpus donation by a fund or trust or institution or university or education institution to or hospital to another such fund also 1023C also shall not be considered as an application of income. This has been done to ensure that these institutes do not avail the dual benefit, that is exemption of income as well as application of income. So everywhere, they have plugged the loophole, sir. No deduction of corpus donation made to 1023C approved institution section 11. That's what we discussed again now. So 12A also they made an amendment now. 12A to 1023C also not allowed, they are telling. Now, Finance Act 2020 provides that any corpus donation made by a trust under 12AA to 1023C registered institutions also shall not be treated as an application of income. 1023C 4, 5, 6 and 6A. In view of this amendment, corpus donation given by a section 12AA registered institution to 1023C approved institution will also not be treated as an application of income. So everywhere they have plugged the loophole. Amendment has been introduced so that these institutions do not avail the dual benefit of exemption, as the corpus donation received by the institutions approved under section 1023C shall not be treated as income in their hands. Obviously, we discussed that. So when the recipient itself is exempt, corpus donation exempt in the hands of recipient, why should the donor trust again be allowed as an application? Basic crux of the matter. Neither the donor trust can claim an application of corpus donation in his books or statement of total income. In his books you can claim, accounts you can claim. In the statement of total income, application is not allowed. Why? Because the recipient charitable trust or the recipient 1023C approved institution, it is exempt in his hands. So therefore it is exempt there. So also I will not allow application here. Next amendment. Application amendment is made in proviso to section 11 subsection 7. So what was that proviso is added here? What is the proviso? Provided that such registration shall become inoperative from the date on which the trust or institution is approved under clause 23C of section 10 or is notified under clause 46 of the said section, as the case may be, or the date on which this proviso has come into force, whichever is later. Provided further that the trust or institution whose registration has become inoperative under the first proviso may apply to get its registration operative under section 12AA or 12AB is subject to condition that on doing so, approval under 1023C or notification under clause 46, as the case may be, to such trust or institution shall cease to have any effect from the date on which the said registration becomes operative, and thereafter it shall not be entitled to exemption under respective clauses. Very simple, sir. From now on, my dear friends, you have to choose. Earlier, your trust, your charitable trust, or your education institution, or your hospital, it had both 1023C, it had even 1046, it had even 12A. For example, your hospital registration, your education institution, notified institutions was 1046, and even 1023C you had, and you had even 12A. Now they are telling nothing doing. Choose either 12A or 1023C or 1046. They have put a bifurcation now. They have put a column. Either this or that. You cannot enjoy both. So now they are telling, but you can come back both, they are telling. Further, suppose now one registration will be operative, another registration shall become inoperative. Suppose you are approved under 1023C or 1046, and now you want to come under 12A. You are approved under both. You want to only come from under 12A. Then this 1023C or 1046 shall become inoperative. Then they are telling, what is that? Such registration shall become inoperative from the date on which a trust or institution is approved under 1023C or 1046. Why? Because this 12A is already registered. Now you have even 1023C or 1046. So if you want the approval on 1023C or 1046, 12A shall become inoperative. Very simple. Either 12A or 1023C. First proviso is telling, if you want 1023C or 1046, then you forget 12A. Second proviso, what are they telling this? Further provided that, what are they telling? Provided further, if you want to make 12A operative now, 12A became inoperative. Why, sir? Because I want approval 1023C or 1046. Now, I want to claim 12A. Okay, right? For example, it is more than 5 crores, educational colleges, hospitals, more than 5 crores. So naturally, you have to go for approval 1023C. 1023C, you have to go for approval. Less than 5 crores, I told you 1023C 3AD, 1023C 3AE. You need not go for any approval below 5 crores now. Amendment made by Finance Act 21. By Finance Act 20, it is still 1 crore only. Anyway, your choice, they are telling from this year onwards, even in registration, you want 12A, you please forget 1023C or 1046. You want 1023C, 1046, please forget 12A. But they are telling, provided further, trust or institution registration has become inoperative under first proviso. Why? Because I opted for 1023C or 1046. Therefore, no 12A. So if I want to go back to 12A, they are telling no problem. You want to go back to 12A, may apply to get its registration operative under 12AA or now 12AB, which effect from 1st April 21 is 12AB, subject to the condition that approval on 1023C or your notification on 1046 shall cease to have any effect from the date on which said registration becomes operative, and thereafter it shall not be entitled to exemption under the respective clauses. So law is allowing you that one time, exemption again. Now, yes, sir. Moving further. Now, due date of filing of return and audit report. This Finance Act 20, sir. Audit report in form 10B and 10BB. 10B, it's for 12A and 10BB is for all 1023C. Has to be filed 1 month prior to the due date of filing return of income under 139(1) of the Act. So due date under 139(1) of the Act as amended by Finance Act 20 is 31st October of the assessment year. Accordingly, the cutoff date for furnishing audit report in form 10B and 10BB now stands to be 30th of September, unless extended last year. 1 month before you have to upload. Next, amendments in 1023C. Now, similarly, now these two amendments will go through in detail because, this is for your registration and time limits also. Now, This is 1023C. Don't worry. If we do 12AC and 12AB, everything we covered, sir. All the amendments in 1023C, 80G, etc. all are same. So don't worry at all. So we will just go through 12AB and 12AC. Everything is same. Now, let me go to, 12. So you know the present condition, sir. Earlier it was 12A, then it became 12A. Now it is 12AB. Now, what is 12AB? Very careful, sir. Now first is 12AC. Following clause 12AC shall be inserted after clause AB of subsection 1 of 12A. So 12A subsection 1 clause AC. Before this, better to go through 12AB, then we'll come to this registration time limits. So let me go through your 12AB, then I'll come back again. In insertion of new section 12AB, procedure for fresh registration. Nothing to worry, sir. What was there, sir? Earlier 12A, 12A now substituted all together with a new section. 12A and 12A is deleted from the statute. See what happened? All these Finance Act 20, but because of COVID and because of this pandemic, it is now postponed from 1st April 21. That's why it is now June 21. This due date for applying for registration. Anyway, this 12AB, it is of Finance Act 20 only. So insertion of new section 12AB, procedure for fresh registration. Let us go to the provision. 12AB 1. 12AB subsection 1. The principal commissioner or commissioner on receipt of an application made under clause AC. What we are going to see now. 12A subsection 1 clause AC. Principal commissioner on receipt of an application made under 12A subsection 1 clause AC shall, where application is made under subclause 1 of the said clause, pass an order in writing registering the trust or institution for a period of 5 years. We'll go through everything, don't worry. I am just taking through the section. Clause by clause we'll discuss. Where the application is made under subclause 2 or subclause 3 or subclause 4 or subclause 5. See, if you make an application subclause 1, they are telling this principal commissioner or commissioner will register the trust for 5 years. Where it is under subclause 2, subclause 3, subclause 4, subclause 5. Under the next 4 clauses, there are 6 clauses in 12A subsection 1 clause AC. There is subclause 1, 2, 3, 4, 5, 6. We will discuss that, don't worry. If you apply under subclause 1 of what? Subclause 1 of subsection 1 of clause AC of 12A, then they are telling order will be passed registering the trust for 5 years. Suppose application made under subclause 2, subclause 3, 4, 5, then the trust will call, then what will happen? Officer, the principal commissioner, call for all documents or information from the trust or institution, or make all such inquiries as he thinks necessary in order to satisfy himself about the genuineness of activities of the trust or institution and compliance of such requirements of any other law for the time being in force by the trust or institution as are material for the purposes of achieving its objects. We will see. After satisfying himself about the objects of the trust or institution and the genuineness of its activities under item A and compliance of requirements item B of subclause 1, pass an order in writing registering trust or institution for a period of 5 years, or not so satisfied, pass an order in writing rejecting such application and also cancelling registration after affording a reasonable opportunity of being heard. Where application is made on subclause 6 of the said clause, pass an order in writing provisionally registering the trust or institution for a period of 3 years from the assessment year from which registration is sought and send a copy of such order to the trust or institution. Now, don't worry. We will go back and we'll discuss in detail. Now, sir, 12A subsection 1 clause AC. Now, what are they telling here? These are conditions for applicability of 11 and 12. Now, please understand there are 6 subclauses here where the trust or institution is registered under 12A as it stood immediately before its amendment of Finance Number 2 Act or under 12AA within 3 months from the first day of April 2021, where the trust or institution registered on 12AB and the period of said registration due to expire at least 6 months prior to the expiry of the said period, where the trust or institution has been provisionally registered on 12AB at least 6 months prior to the expiry of the period of provisional registration or within 6 months of commencement of its activities, whichever is earlier. 4, where the registration of the trust or institution has become inoperative due to the first proviso to subsection 7 of 11, at least 6 months prior to the commencement of assessment year from which said registration is sought to be made operative. 5. Where the trust or institution has adopted or undertaken modification of objects which do not conform to the conditions of registration within a period of 30 days from the date of the said adoption or modification. In any other case, at least 1 month prior to the commencement of previous year, relevant to the assessment year from which such registration is sought, and such trust or institution is registered on 12AB. Now, don't worry, sir. What to do? Now we will sum up. 12A, you have to apply for registration now. Okay? 12A, subsection 1, clause AC, subclass 1, 2, 3, 4, 5, 6. What is subclass 1? Listen carefully. All existing charitable trusts. All existing charitable trusts. Now I told you 1023C, 80G, 12A, everything is same. So when I talk about charitable trust, it means even approval 1023C, even recognition 80G, all are same. Okay? So charitable trust means include even educational institutions, hospitals, etc. who have got approval 10 within bracket 23C. Ditto is there, sir. Nothing to worry. So subclass 1 now. All existing registered charitable trust. Law is telling, please apply for registration. What time? Within 3 months from 1st day of April 2021. Before 30th of June, please apply for registration. Who should apply, sir? All existing registered charitable trust or institutions. 12A, subsection 1, clause AC, subclass 1. Fine, sir. Subclass 2. What is subclass 2? I told you now. These fellows applied for registration. Who? All existing charitable trust. What is that, sir? They will be given only provisional registration when they apply for registration. So after they apply for registration, they'll be given provisional registration for 3 years. Okay. After the 3 years, what will these trusts do? They will again apply for, final registration, provisional registration. Then I will use the word final registration. So when to apply for final registration? Either 6 months before the expiry of 3 years or within 6 months from the commencement of activities, whichever is earlier. See the steps now. Very simple, sir. Existing registered charitable trust, you please apply for registration now. Existing registered charitable trust, you apply for registration within 3 months. That is up to June now. 1st April to 30th of June, you will be given registration. You will be given registration for how many period? For 5 years. For 5 years, you will be given. Now, next step. These existing registered charitable trust, they have applied for registration within 3 months. They have been given automatically registration for 5 years. No questions asked, sir. No questions asked. Next, when they want to renew that registration, I'm not talking provisional. They want to renew that registration. Subclass 2 is telling, you guys are already registered on 12AB. Now your period is about to expire, 5 years. Before 6 months from the end of 5 years, you please apply for, again, renewal of registration. When you apply for renewal of registration, at that time, I'll ask you all the questions. Genuineness of activities of the trust, all that I'll check. And again, I'll grant you for a period of 5 years. Now, when a new trust applies for registration, where the trust or institution has been provisionally registered on 12AB, or at least 6 months prior to expiry of the period of the provisional registration, or within 6 months of the commencement of its activities, whichever is earlier. So where the trust or institution has been provisionally registered on a 12AB, at least 6 months prior to the expiry of the period of registration, provisional. So 3 years you'll be given provisional registration. So within 6 months before, first what are they telling? Within 6 months of commencement of activities or before 6 months of the expiry of the period of provisional registration, you apply for final registration. That is for again 5 years only. Every 5 years you have to apply, sir. First is provisional registration, then you'll be given 5 years. That provisional is 3 years. Again 5 years is final. Again every 5 years before 6 months you keep on applying. Then 4, where registration of the trust or institution has become inoperative due to first proviso to 11/7, at least 6 months prior to the commencement of assessment year from which registration is sought to be made operative. Again, trust or institution has adopted or undertaken modification of objects. Every modification of objects you need not apply for fresh registration, sir. Modification of objects do not conform to the conditions of registration. Please understand, modification of those objects which do not conform to the conditions of registration within a period of 30 days from the date of said adoption or modification, you please apply for registration again. In any other case, at least 1 month, that is for new, all the new, your charitable trust, newly formed charitable trust, you want to apply for registration. In any other case, at least 1 month prior to the commencement of the previous year, at least 1 month prior to the commencement of the previous year, relevant to assessment year from which the said registration is sought. That is, you keep the deadline as 28th February or 29th February in case of leap year. So at least 1 month prior to the commencement of the previous year, relevant to assessment year from which the said registration is sought. Now, let me take you through the table. We have a table so that, you know, it will be more easier. We'll go to the highlights. I prepared a beautiful table. We'll go through that table. Now, what are the highlights here? Basically, Madam Nirmala Sitharaman, what she's telling, so many charitable trusts in India, so many schools, educational institutions, you are claiming 1023C, you are claiming exemption 1111. I don't know how many people are claiming exemption. I want to make a register now. When she asked the department question, department is not unable to give how many charitable trusts are there in India, how many are claiming exemptions. So she's telling, I don't know. I want to know how many charitable trusts are there in India who are all claiming exemption. Lot of money laundering is done in the garb of and in the form of this charitable trust. Therefore, madam is telling, I will prepare a national register now. How to prepare national register? Tell all of them to apply for number. Tell all of them, please tell all of them to apply for number. I'll give them one URN, unique registration ID, what we discussed that. I'll give you one URN so that my register will be ready. I know how many charitable trusts are there in India. My register is ready. So I know how many people are claiming exemption who are out of the tax net. I will give. And also one more reason was there was a representation of the finance minister. Sir, there are a lot of charitable trusts in India. They are there from 30 years, 40 years, 50 years, etc. We don't have registration certificate. What is to be done now? We lost that certificate. When I go to department, also department said, I don't have that certificate. So we want that number, or somebody, they don't have a certificate, they have the number, etc. They went and requested, you allow us to apply, sir, and get the certificate. She told, okay, I will allow you. But earlier, what was there? It was only for 5 years. Before 2010, 80G, all that was only 5 years. Then that registration process, now renewal has come. Now, madam, along with that, she helped, okay, you apply, I'll give you the number, etc. But with this, she brought in all this renewal also. So now, government is aiming to create a national register of all charitable entities and to eliminate defunct and inactive ones through these amendments. Until now, the process of registration completely manual and scattered all over the country. You have to apply online now. Newly created national register aims to better regulate the registration procedure, thereby streamlining spending the philanthropy and CSR space. Entire scheme of registration 12AB will be online, though not faceless. You can still meet the officer, sir. You can go to the charitable trust department there, income tax officer, you can meet them, but everything has to be online only. Now, all the trusts currently registered in 12A, 12AA to make an application for registration to principal CIT exemptions. Who is the authority, sir, who will issue registration certificate? My principal CIT sitting in Bangalore. Entire India, please, entire India, you are wherever you are, Haryana, Kerala, Uttar Pradesh, Madhya Pradesh, etc. All of you should apply online. And who will issue? Who is the person who will issue the certificate? It is principal CIT, your CPC as well as principal CIT, Bangalore. 12A to make an application for registration to principal CIT or CIT exemptions within 3 months from the 1st April 2021, between 1st April 21 to 30th June 21. Registering authorities we discussed. Now, registration to be granted on 12AB, that new registration, 12A, 12AB now. Registration to be granted in 12AB for a period of 5 years by principal CIT within a period of 6 months from the end of the month in which the application is made. Hence, the new registration procedure under 12AB is not a permanent like earlier, but for a limited period. To apply for renewal of 12AB, at least 6 months before end of 5 years. In case of renewal on 12AB, principal CIT to call for documents at the time of renewal, not at the time of first application. For provision also will not call for any documents. In case of renewal, to call, principal CIT will call for all documents and will make all inquiries to be satisfied about genuineness of activities of the trust and compliance of requirements of any other law as are material for the purposes of achievements of its objects. After satisfaction about objects of the trust, genuineness of activities, and compliance with requirements of other laws, principal CIT to grant registration for a period of 5 years within 6 months from the end of the month in which application is made. If principal CIT is not satisfied, application is to be rejected and registration to be cancelled after affording opportunity of being heard. In case of new trust applying for registration 12AB, to apply for registration 1 month prior to commencement of previous year, relevant to assessment year from which registration is sought. All the trust whose application 12A pending as on 1/4/21, where no order is passed, shall be deemed to be application made as above. Now, provisional registration to be granted on 12AB for a period of 3 years from assessment year, from which the registration sought by principal CAT within a period of 1 month from the end of the month in which application is made. Similarly, trust modifying objects not conforming to condition of registration, application to be made for registration within 30 days from the date of adoption or modification of objects, and same procedure as cases of renewal of registration. The procedure relating to approval, registration, notification, section 1023C, 12AA, 35, 30, 80G, etc. have been rationalized. Similarly, amendments made by Finance Act 2020, section 35, 80G for intimation, filing statements before income tax authorities, furnishing certificates to donors, etc. with effect from 1st April 2021. Now, just we'll go through the time limit, sir, so that there is no doubt at all for you. And this is given clause wise. I told you, sir, you have to, the time limits for registration are given, you know, how to apply and what are the time limits for registration given in 12A subsection 1 clause AC, and then subclause 1, 2, 3, 4, 5, 6. We'll see each clause wise. For each clause, there is a separate slide. You will not get confused for the time limits. So for first clause, 12A, 12 subsection A, 12 capital A, subsection 1, clause AC, subclause 1. What is the category? Trust or registered, already registered. Your existing registered charitable trust, sir. Now, what will happen? Forget everything. Just remember the table now. Just forget all the discussion. 12AB. Now you are going for registration. What is the time limit for registration? Within what time I should file, and within what time the principal CAT should give me the registration. So 12A1 AC1 trust or registered, already registered, 12AA or 12 existing registered charitable trust. Time limit for filing application within 3 months, sir. No doubt about it. 1st April 2021 to 30th June 21. Which form, sir? Form 10A. Even for 80G, Form 10A. Even for 1023C, Form 10A. So Form 10A is the new form now. Forget the old form. Form 10A, you have to apply for even 80G, even 1023C, and even your 12AB now. So order you will be getting in which form, sir? You will apply in Form 10A within 3 months. All existing charitable trust, you will get the order in Form 10AC. Okay, sir? Now, time limit is how much, sir? Within 3 months I have to apply. So what time limit for passing order by principal CAT? All this is only for existing registered charitable trust. So time limit for passing order by principal CAT within 3 months from the end of the month in which application is received. So time limit for passing within 3 months from the end of the month in which application is received. That registration will be valid for 5 years from the original registration year up to financial year 25-26. Very simple, because you are applying in this financial year up to financial year 25-26, financial year 25-26, 24-25, 23-24, 22-21, 21-22. Now, validity and type of registration 5 years, normal registration. No documents will be called for, sir. No documents to be called for, satisfying the genuineness and to see compliance of other laws. Very important, sir. Now they are telling at the time of renewal, I am telling this is what all existing registered charitable trust apply within 3 months. Form 10A. What is the time limit for passing order? Within 3 months from the end of the month in which application is received. How many years should be given? 5 years should be valid. What is the order form in Form 10AC? Apply in Form 10A. Order of registration given in Form 10AC. How many years? 5 years. So what documents will be called? Nothing, sir. No documents will be called for satisfying the genuineness and to see compliance of other laws. Normal registration. Now next, subclass 2. What is the subclass 2? Renewal. This is renewal of all charitable trusts. Trust or registration which are registered on 12AB and the period of the said registration due to expire. That is renewal of charitable trust at least 6 months before the expiry of the said period. Okay, sir. This form is still not there. Why? This form is not there on the portal. Why? Sir, 5 years should go, sir. After 5 years, before 6 months from the end of the expiry of 5 years, before 6 months only this form will be enabled. No 10AB, sir, as on date. Not required also. What is required is Form 10A. When I apply in Form 10A, all registered charitable trust, I will get the order in Form 10AC. Very simple. For how many years? For 5 years. Nothing will be called for. Now, Subclause 2 is what? For renewal of all charitable trust. When I apply for renewal, what is the time limit, sir? Before 6 months, at least 6 months before the expiry of the said period. Again, which is the application form? 10AB, sir. For renewal, it is form 10AB. I will get the order in form 10AD. Okay. So for renewal, again for a fresh period of 5 years, what will happen? Form 10AB and then order will pass in form 10AD. So what is the time limit for passing order by Honorable Principal CIT or CIT exemptions? Within 6 months from the end of the month in which application was received. So validity and type of registration, again 5 years, normal registration. So at the time of renewal, my dear friend, the PCIT will call for all documents and evidence for the genuineness of the activities of the trust and to see about non-compliance of other laws. This is what I am worried for. See, these fellows, non-compliance of other laws also, you know what will happen? Registration will not be given, sir. Okay, you are checking the genuineness of activities of the trust, etc. Fine. Non-compliance of other laws. You know, the trust maybe, you know, you have to comply with the ESI laws, PF laws, municipal taxes, etc. Non-compliance and other law also, it has an impact in the charitable trust here. Registration may be cancelled. For what? For non-compliance and other laws, they are telling, I will not grant you registration. So be careful. Next. Subclause 3 now. So 12A, subsection 1, clause AC, subclause 3. What is this, sir? Trusts opting for provisional to final registration for 5 years. This provision is for whom, sir? All the new charitable trusts. All the new trusts or institutions which have been granted provisional registration in section 12AB, trust opting for provisional to final registration for 5 years, at least 6 months before the expiry of provisional registration or within 6 months of commencement of its activities, whichever is earlier. Applicable form is, you know, order passed in form 10AB. Again, for provisional, this is for provisional to, you know, final registration. Provisional to final registration. So all the new trusts, you know, my dear friends, all the new trusts, you have been granted provisional registration. You want to apply for final registration. That means what are they telling? Provisional is only for 3 years. So at least 6 months before the expiry of provisional registration, provisional to final, what is the time limit first to apply? For provisional to final registration, time limit to apply is 6 months before the expiry of the provisional registration. That is 3 years, sir. Before 6 months before the expiry of 3 years, or within commencement of, or within 6 months of commencement of activities, whichever is earlier. So which form you have to apply? Form 10AB I have to apply. I'll get the order in form 10AD. Now, what is the time limit for order being passed by the registering authority? It is within 6 months from the end of the month in which application was received. So this is again 5 years, sir, and then normal registration. Here also documents will be called, sir. All documents, registering authority will call for documents and all evidence to check the genuineness of activities of the trust and to see about the non-compliance of provisions of other laws. Next, subclause 4. So what is this entity? That first proviso to 11.7 we discussed, provided for, further provided for. Either you opt for 12A, or if you don't want to opt for 12A, then you want 1023C or 1046 for all notified institution. So for those trusts, trust or institution whose registration has become inoperative due to first proviso to 11.7. So again, time limit for filing application for registration, at least 6 months before the commencement of the assessment year from which the said registration is sought to be made operative. So applicable form, order passed in form 10AB. I mean, you have to apply in form 10AB, order will pass in form 10AD. Now, time limit for passing order by principal CIT, it will be within 6 months from the end of the month in which application was received. Same things are time limit. Validity and type of registration, again 5 years. So I told you, everywhere it is 5 years, except provisional registration is 3 years, else only 5 years. After 5 years, they are again going to call for all the documents, all the evidences, and they are going to check the genuineness of the activities of the trust, see the non-compliance of our other laws. Then only they will decide to give you renewal. Next, last subsection is 5 and then 6. Okay, last but 5. This is 5 is, you know, for modification of objects of the trust. So for applies to all those trust or institutions who has adopted or undertaken modifications of the objects which do not conform to the conditions of registration. That is modification of objects. What is the time limit, sir? Time limit for filing application for registration. It is within a period of 30 days. Within a period of 30 days. Yeah, from the date of adoption or modification, and applicable form is all form 10AB, and then form 10AD will be the order passed. Yes, sir. Yeah. So time limit for passing order by again your registering authority, that is the principal CAT or CIT, within 6 months from the end of the month in which application was received. Validity and type of registration is 5 years, normal registration, and the documents as usual. Now, the last clause, 6. In any other case, including fresh provisional registration or pending application as on 1/4/21, at least 1 month before the commencement of the previous year, relevant to the assessment year from which the said registration is sought. Form 10A you have to apply, and then order will be given in Form 10A. See, time limit for passing order by principal CAT within 1 month from the end of the month in which the application is received. So validity and type of registration is only 3 years provisional registration. For provisional registration, no documents to be called for satisfying the genuineness and to see compliance of all the other laws. No documents will be called for, sir, here for provisional registration. Blindly they are telling. In any other case, including fresh provisional registration or pending application as on 1/4/21. For all your new registrations or for all the registrations which you applied before 31st of March, but you have not received till today, what is the law telling? Section is telling, don't worry, you need not apply again. You have applied. You applied in February 21. You applied in January 21. You applied in December 21. Or you applied in March 21. You have not got the order. Don't worry. Or for all the new registered charitable trusts you want to apply as on today, you please apply. 6 will only apply. You need not apply again. What is the time limit? At least 1 month before the commencement of the previous year, relevant to assessment year from which the said registration is sought, apply in Form 10A. Within 1 month from the end of the month in which application received, you will be given provisional registration without asking a single question. Order will be passed in Form 10AC. Fine, sir. So this is the the registration procedure. This is for 12AC. We have discussed that. Now, let us quickly move forward now for the there are a few issues now. We can discuss those issues now. Now, see, earlier what happened, my dear friends? Now, already registered trust and institution, 12A, subsection 1, clause AC, subclause 1. No problem, you know that. So 5 years will be given, no problem. Now, here what happens? In this, there is one issue I would like to raise here. It is only for renewal or re-registration where such trusts are registered under 12A or 12AA. Okay. Existing registered charitable trust, I told. Existing registered charitable trust. It does not seem to cover such trusts which are deemed to be registered. Earlier in the 12AA, 12AA regime, 12A and 12AA regime, all my experienced friends, you will know that within 6 months they should have passed the order. No, they did not pass the order. So it is deemed to be registered. You did not pass the order, therefore you are deemed to be registered. If you were deemed to be registered under the erstwhile 12A, under the erstwhile 12AA, you are existing registered charitable trust. But what is the registration you have got? You are deemed to be registered. So, in our humble opinion here, it does not seem to cover such trusts which are deemed to be registered in view of the decision of Honorable Supreme Court in CIT versus Society for Promotion of Education, Adventure Sports and Conservation of Environment due to non-disposal of registration application within the prescribed time period. See, the officer, the principal CIT, or at that time the CIT under 12A, CIT exemptions on 12A and 12AA, he did not dispose of the application within the prescribed time limit. I told you that 6 months. Therefore, you are deemed to be, you have to, apply. Earlier, what was it? 12A, 12A, 1 year time limit was there. 1 year from the date of creation of trust, you apply for registration. Within 6 months, they should have, taken up either to give the registration or don't give the registration. 6 months was the time limit. But because it was not disposed of, so due to non-disposal of registration application within the prescribed time limit, so Supreme Court here, they allowed the registration, deemed to be registered, because you did not dispose of the application for registration, it was deemed to be registered. Supreme Court has passed judgment in Society for Promotion of Education, Adventure Sports and Conservation of Environment. Now, this position is further clear from the language of subsection 2 of section 12AB, all these transitional provisions, according to which all application pending on which no order under section 12AA 1B, that 6 months, was passed would be treated as application under residuary clause, that is 12A 1AC 6. Simple. So all this they are telling what? You file under that 6 only. All applications pending again. That is why what are they telling here? This position is further clear from the language of subsection 2 of 12AB, according to which all applications pending on which no order is passed and 12A 1B, that is your order should have been passed for registration, no order is passed, therefore based on Supreme Court decision you are deemed to be registered, but however no order was passed. Therefore, although it is existing registered trust, my dear friend, why I am raising the issue, you need not apply under 1, you have to apply under 6, the last one. 12AA 1B was passed, would be treated as application under residuary clause, section 12A, subsection 1, clause AC 6 it is. Again, what happened, my dear friend? If your registration was not granted by the erstwhile authority on 12A, 12AA, listen very carefully. Registration not given or registration cancelled or registration not given under 12A, 12AA, and you guys have filed an appeal with CIT appeals. Appeal is pending with CIT appeals, or CIT also allowed, department went to tribunal, or CIT did not allow, so you went to tribunal. Now ITAT, Honorable ITAT has remanded the case back to the assessing officer. He has remanded the case back to assessing officer for fresh adjudication. The matter of registration has been remitted back to the file of the registration of the assessing officer or the CIT exemptions, etc., to decide the matter afresh. But no fresh order has been passed in this regard by the competent authority. Then I should apply under which section? The 12A, subsection 1, clause AC, subclause 1, 2, 3, 4, 5, 6. In that 6th clause, I have to fit in there. So what to apply? In our opinion here, you have to apply all applications pending on which no order on 12A 1B was passed after the set aside of the order of tribunal. Naturally, tribunal has remanded back. This fellow has not yet passed the order. Assessing officer not yet passed the order. And as per 12A 1B, it would be treated as application under residuary clause only, 12A subsection 1, clause AC 6, read with 12AB 2. These were transitional provisions. In any case, such application should be deemed to be pending under section 12AB 2 and would be granted provisional registration only. Please understand, all these trusts will be granted provisional registration for 3 years within 1 month from the said date, 1st of April 21. Since these trusts may already be undertaking charitable activities, very, very interesting. Please understand, these trusts are also undertaking charitable activities. So, 1st April, you please apply for provisional. Immediately, from provisional to final registration, what is the time limit? Either before 6 months from the expiry of 3 years or within 6 months from the commencement of activities. Whichever is earlier, provisional to final. So here, the trust has already started the, the charitable activity, commencement of charitable activity. Therefore, what are they telling? You apply for provisional, you also apply for final registration also. Why? Because you have already commenced the charitable activity. Since the trust may already be undertaking charitable activity, such trust may have to apply for final registration under 12A1 AC3 within 6 months from 1/4/21 by taking that date as the date of commencement of charitable activities. Why? Because of commencement activities. Therefore, what will happen? Moment apply for final registration, inquiries will be done. They'll call for all the records to test to check the genuineness of activities of the trust and also compliance under other laws. However, if considerable time, say more than 6 months since the order of the tribunal has elapsed, again here also deemed may come, sir, deemed registration concept. Tribunal remanded the case back to the file of assessing officer for considering the matter afresh, and the assessing officer has just sat on the file without passing any order. It shall be treated as deemed registration or deemed approval by virtue of the Supreme Court order. If considerable time, say more than 6 months since the order of the tribunal has elapsed, such trust, etc., may treat themselves as deemed registered due to non-disposal application in view of the decision of Honorable Supreme Court, and may instead apply for registration under Section 12A, subsection 1, clause A, subsection 1, clause AC, subclause 1. Now, there may also be a case where appeal is pending. We discussed that. In such situation, what to do? We'll have to wait for the outcome of the appeal, and therefore you ought to apply for fresh registration under 12A, subsection 1, clause AC, subclause 6 as a measure of abundant caution. Now, what is this, sir? Yes, sir. Now, yes, this revival of inoperative registration. Okay, registration in case of change in objects. Yeah. So this is again, a revival of inoperative registration under 12A or 12A, 12A1, AC4. That. So two provisos were added to subsection 7 of 11 to provide that if a trust enjoys registration under section 12A or 12A, and you are also approved on 10 within bracket 23C or notified in 1046, then registration 12A or 12A would become inoperative inter alia from the date of present amendment on and from 1st April 21. Such trust may reapply for registration 12AB. Such application needs to be made before the expiry of period of 6 months from beginning of the assessment year from which such registration is sought to be made operative. Upon receipt of such application, competent authority may undertake inquiry. Process of inquiry, extent of inquiry, its outcome, and period within which the order is to be passed would be identical as discussed in the preceding paragraphs. Once registration under section 12AB is revived, the approval under 1023C or notification under section 1046 will cease to have any effect from the date on which said registration becomes operative. Now, what about your change in objects? If the charitable trust, etc., has undertaken change in its objects clause, not confirming the conditions of registration already granted, it would have to apply for registration within a period of 30 days from the date of said modification as prescribed under section 12A, subsection 1, clause AC, subclause 5. Upon receipt of such application, inquiry may be made by the competent authority. Now, fresh registration on expiry of registration under section 12AB, that is 12A, subsection 1, clause AC 2. So, this renewal of registration by making a fresh application to be made on or before 6 months prior to the expiry of registration under section 12AB. So, such trust may be trusts which were given final registration in place of provisional registration and 12AB, and such registrations have come up for renewal under 12AB. Now, such trust may be trust which was also given registration under section 12AB on seeking revival of inoperative registration due to the operation of two provisos of section 11.7, or which was given registration in 12AB after modified object was adopted. All these trusts would have to make application to the competent authority seeking renewal of registration as prescribed under section 12A, subsection 1, clause AC, subclause 2. Next. Almost similar amendments have been made with slight variations here and there in the matter of approval under 1023C and 80G. So 1023C, there is those two clauses are not there. That is, that 11.7 proviso, as well as your modification of objects. Now, amendment in 80G, very important, sir. Most dangerous provision I told you. Now, suppose a trust has collected donation of 10 crores. 10 crores they have collected donation. Now, they have to upload that. They have to upload that statement. So, that statement you have to upload. If you don't upload the statement, you don't have the PAN, address, the PAN, address, etc. of all the donors. That this is the donee trust. It is uploading that. The donee trust is uploading all the donations received. So, suppose 5 crores the donation received. 3 crores only they have the details. Other 2 crores will become anonymous donations, sir. Please be careful. Will become anonymous donation. And again, those The donors will not be able to claim such deduction under 80G. Now, so same thing we have to apply here. Same dates. Yes. $271K, sir. Failure to furnish statements, etc. If you don't furnish that statement of donation, assessing officer 271K, 10,000 rupees, but may extend to 1 lakh rupees. Here it is 80G58 and 80G59. Deliver a statement within the time prescribed under 80G58 or furnish a certificate. Once you furnish that certificate, like your TDS returns, first you file the return, then you furnish the TDS certificate. Similarly, here, all these 80G approved trusts, they have to furnish a statement of donation, then issue a certificate. That is given in 80G5, 80G58, 80G59. Certificate prescribed under 80G59 and time statement to be delivered within the time prescribed under 80G58. So if there is a delay, what are they telling you? Fails to deliver, cost to be delivered a statement within the time prescribed, 10,000, but which may not extend to, which may extend to 1 lakh rupees, 271K. Again, 271H. Failure to furnish statements also they are telling. There is a failure to furnish statements, not less than 10,000, but which extend to 1 lakh rupees again. 271H. Now issues in re-registration and 12AB, 1023C and 80G. Yes, sir. Now, what happens? Some issues we will take and then, we can consider all the questions, etc. Now, what will happen, sir? Suppose, I did not file application at all by 30th of June. What will happen? I forgot. There was lockdown, etc. There was pandemic. My office did not open, or the charitable trust did not come to me for registration. That hospital did not come to me for registration. That school did not come to me for registration. That college did not come to me for registration. What can I do? It is not my fault. So I did not file the application under everybody. We have to file, sir. You know that everybody we have to apply, irrespective. So before 30th of June, unless the time is extended now. As of today, the time stands till 30th of June. I did not file. So what will happen? Don't worry, sir. 115 TD will not apply. 150 TD cancellation of charitable trust, registration of charitable trust. Cancellation will not apply. Registration will not be cancelled. No. Order has to be passed for cancelling of registration. If the order is passed for cancelling of registration, then you know how to pay the tax on accreted income, how to calculate accreted income, fair market value of the assets of the trust. For example, Rotary Trust, for example, other trusts, they are there for 30 years, 40 years, 50 years. You have got all land and buildings in the charitable trust. They are 40 years old, 50 years old. Today, fair market value of all the assets, today it will go into several crores, less liabilities on that accreted income, pay tax at maximum marginal rate. So only if it's cancelled. Here, my registration itself will be ceased to, it will become inoperative, that's all. It will not be cancelled as such. So, what will happen? It will be taxed. No, income will be taxed under 5 years of income. 115 TD will be attracted, in my opinion, only if the registration granted in 12AA or 12AB has been cancelled. Here, what happened? Non-submission or of the re-registration application shall not amount to cancellation of registration. I am already existing, sir. Existing registered charitable trust, hospital, institution, etc. I have got all 1023C approvals, etc. I only didn't apply for renewal. What is this? Not renewal. Existing registered trust also should apply for registration again. I did not apply before 30th of June. So mere non-submission of re-registration application shall not amount to cancellation of registration. Therefore, provision of 115 TD will not apply. Now, what are the powers of PCIT or CIT? Now, application we have made in prescribed form and manner. So, 10A, when you make the prescribed form, PCIT or CIT has no discretion absolutely to call for documents or information or to make inquiries. A fellow has to mandatorily pass an order in writing granting the registration. And in such cases, the PCIT or CIT does not have the power to satisfy himself about the objects or genuineness of activities. Blindly, I file an application in 10A, PCIT or CIT shall pass an order in writing granting approval in form 10AC Along with, he will also issue that 16-digit unique alphanumeric unique registration number, finish, to the applicants. No questions, sir. He cannot call for anything. Why? He's giving me provisional registration. When I file Form 10A, basically you can't question me. If any, but again it comes with a rider. What is the telling? If at any point of time, if at any point of time, what are they telling here? It is noticed that Form 10A has not been duly filled in by not providing or fully or partly or by providing false or incorrect information or documents required to be provided under this rule, then the PCIT or CIT, after giving an opportunity of being heard, may cancel the approval granted in form number 10AC, and URN and such approval of URN shall be deemed to have never been granted or issued. Section itself doesn't provide any powers to cancel the registration at the time of renewal of application. Registration can be cancelled only in circumstances specified in the Act. Power to cancel application for re-registration if the application is not filled properly as provided in the rules, in our opinion, seems to be arbitrary and ultra-vires the provisions of the Act. Just because I did not fill up the application, I did not fill up all the details or partly providing all the details. Now, requirement of tax audit report under 11.4. There is a dichotomy here. I'll tell you what is it. Documents to be submitted at the time of application for registration or renewal include a copy of audit report under section 44AB in case of incidental business activities under section 11.4 and 11.4A. For the purposes of 11.4A, there is no requirement of audit in 44AB, which is required only if the assessee has taxable income under that business or profession. This requirement will result in needless confusion and controversy. 5 heads of income under 14 do not apply to a charitable trust. You know that. Under 12A or 12AB or 12A, it does not apply here. Therefore, there is no income to be computed under business or profession. Now, in this Madras case of estate versus Etiraj CIT, it was clearly held that income from properties has to be arrived at in normal commercial manner without reference to the provisions which are attracted by section 14. In this case, the court observed that the language of 11.1A makes it clear that income derived from property held under trust only for charitable and religious purposes, to the extent to which such income is applied to such purposes in India, is excluded. When once the income from property as such is excluded, there is no question of computing the income from property by applying provisions of section 14. Again, there is an old board circular 1968 telling that income should be understood in a commercial sense. So basically, what are we coming at? 11.4A, the accounts of this income subject to 11.4A are not subject to tax audit at all, on the understanding that 28 to 44 will apply to the computation of business income, not income subject to 11.4A. Now, why there is a confusion? This is because of this, my dear friends. In these rules, Income Tax 6th Amendment, Rules 21, specifically provides that where the income of the applicant is direct reproduction of the rule, where the income of the applicant includes profits and gains of business as per the provisions of 11.4A. Incidental business, they can be there, sir. Why not? The applicant has been in existence during any year or years prior to the financial year in which the application for registration is made. Self-certified copies of the annual accounts of such business relating to such prior year or years, not being more than 3 years, immediately preceding the year in which such application is made, for which such accounts have been made up, and self-certified copy of the report of audit as per provisions of 44AB for such period. Thus, the requirement of an audit report 44AB is not consistent at all with the provisions of 11.4A. What was the need for you to mention about 44AB when in 11.4A, what business that which is incidental to the objectives of the trust, and therefore the income would be computed by the normal commercial means, and it's not as per the 44AB tax audit. So you shouldn't have used this word here itself, that the requirement of an audit report 44AB is not consistent with the provision of 11.4A. This should be clarified by CBDT to avoid further confusions. Now, issues in new approval process, statement of donation, 80G, etc. So here we have discussed other issues also, no problem. Statement of donation, that statement of donation, 80G 5 Clause 8 and 9. 9 is for certificate, 8 is for that statement of donation. What is that statement of donation? Every institution, every trust which is approved under ATG, you have to file a statement of donation received and also to issue a certificate to the donor. It has also been further stated that deduction on account of the donation ATG shall be allowed to the donor only on the basis of the statement filed by the donee trust or institution. Hence, if a statement not filed, donor will not get a deduction for donation. In case of delay in filing such statement, late fee of 200 per day shall be applicable under newly inserted 234G also. 234G, 271K, 271H. Even further penalty and 271K, which shall not be less than 10,000, which may extend up to 1 lakh, shall be leviable if the trust or institution fails to file such a statement or fails to issue a certificate of donation. Now, due date of filing of statement and issuing certificate. What is the due date, sir? ATG, that we did not check. So what is the due date of filing of statement and issuing certificate? Newly inserted Rule 12AB, 18AB provides that the statement in Form 10BD, please, that statement is what statement, sir? It is statement in Form 10BD. When from it is applicable, sir? From this financial year, but on or before 31st May, immediately following the next financial year. Now, statement in Form 10BD, this year it is not applicable. By next 31st May, you have to file for this year. Rule 1018AB is inserted. Statement in Form BD, 10BD, shall be filed on or before 31st May, immediately following the financial year in which the donation is received. Then, certificate is issued in what form, sir? 10BE. So, very careful. ADG, you know that. Rule 18AB, statement of donation, I have to file in which form? Form 10BD. What is the due date? On or before 31st of May, immediately following the financial year in which the donation is received. Next, donee is also required to be issued certificate, sir, in Form 10BE, which is also required to be issued on or before the 31st May, immediately following the financial year in which the donation is received. Very good, sir. You are telling me to file the statement of donation on or before 31st May. You are also telling me to issue the TDS certificate on or before 31st May. Tell me what to do. Last date, if I file on or before 31st May, last date, last moment, if I file the statement, which we are accustomed to now, which is a statement of donation with 31st May, before that 31st May, immediately after filing statement of donation, you are telling to issue the TDS certificate also. The TDS certificate means your donation certificate, that is in Form 10BE. 10BE cannot be generated unless I file Form 10BD. So 10BD, please, if you file the Form 10BD on the last day, that is on 31st May at 6 o'clock in the evening in the office. After you file 10BD, you should be able to generate 10BE because that is also last date for issuance of your certificate, your issuance of certificate for donation certificate in Form 10BE. That is also to be issued on or before the 31st of May, immediately following the financial year in which the donation is received. Now, yes. Hence, if the, what are that links? Sub-rule 7 of the newly inserted rule of 18AB provides that the Principal Director General of Income Tax Systems or the Director General of Income Tax Systems, as the case may be, shall lay down the procedure, formats and standards of the purposes of generation and downloads of certificates in Form 10BE. Hence, if the certificate in Form number 10BE is to be generated and downloaded from the web portal, then furnishing the certificate by 31st of May as provided in the rule may create difficulty. I told you, practical difficulty, as a statement of donation is also required to be submitted by 31st of May. In such a situation, date of furnishing the certificate should be at least 15 days after the date of furnishing of statement of donation. It's only a suggestion. It is only a suggestion, but due date is only 31st of May. Now, what about correction statement, sir? Some mistakes are there. PAN, you did not fill the PAN of the donor, or you made a mistake in filling the PAN of the donor, name, etc., address, etc., anything. Name mistake, PAN mistake, amount of donation, etc. Don't worry. Rule 18AB provides that the procedure shall be laid in due course for the filing of correction statement in case of any inadvertent mistake by the reporting entity. That is again given, we read that sub-rule 7 of newly inserted Rule 18AB provides that the Principal Director General of Income Tax Systems or the Director General of Income Tax Systems, as the case may be, shall lay down the procedure to submit correction statement for rectification of any mistake or to add, delete or update the information furnished in Form 10BD. It is there, sir. Nothing to worry. You made a mistake, please go for a revised return. File that revised statement of donation, no problem. Therefore, we have to wait now, relevant procedure to be laid down. One may need to wait for the relevant procedure to be laid down to submit the correction statement for correcting clerical errors, such as wrong name, PAN, amount, etc. Sir, next question, next issue. Suppose the trust has not received any donation at all. Should I file nil statement of donation? Question may arise if there is no donation is received by an entity because it is having approval in ETG. It is having approval in ETG. Whether therefore it is required to submit a nil statement of donation for that period. Rule 18AB doesn't contain any provision to clarify whether a reporting entity is required to submit a nil statement of donation. Hence again, we avoid the clarification from board to avoid any penal consequences. What about the accounting challenge? Sir, now Form 10BD provides that while reporting the aggregate amount of donation received from any person, donation types should be reported on the basis of nature of donation. If you see Form 10BD, they are telling whatever donation you receive, the trust is receiving donation. Very good. What is that donation? Whether corpus donation, whether non-corpus donation, whether it's a grant, what is it karke? Others, etc. So therefore, when that form is asking all these details, the corpus, specific grant, others, etc. Hence, a charitable trust need to adjust the present accounting framework so that the list of donation can be generated from the accounting system itself for each nature of donation, and that too from each donor, so that the correct reporting can be done in Form 10BD. Right now, we can separate the accounts, inform the trust accordingly. You prepare the accounts in such a manner as per Form 10BD, because the details can be accumulated and filled up in the Form 10BD. I have to necessarily upload that statement of donation in order that the donor, the donor trust has to necessarily upload in this format only, so that the donor can get the ATG benefit, can claim ATG. Yeah. Now deduction to the donor now. Now, question which arises again is, if an organization collects donation but does not apply for renewal, or if the approval application is cancelled, what will happen? Now, this fellow has collected donation but does not apply for renewal. He had ATG, but he did not apply, sir. Within 3 months now. This before June you have to apply. So this fellow did not apply. Or approval application is cancelled. What will happen? Approval application is cancelled. The new notified rules and forms do not propose quarterly uploading of ATG related data of donation received and donation certificate to be issued. In such circumstances, the donors will not be able to claim ATG benefit against donation given to organizations between 1st April to 30th June if such organization lose their registration. This appears to be harsh, as the donor should not be penalized by subsequent action of the donee. When the donee clearly had the approval and ATG on the date of the donation, loses the registration on a subsequent date. Now, for purposes of section 35 CCA, in this context, it was 35 CCA, Bombay High Court held in Ramdas Maniklal Gandhi. What is it telling? 35 CCA, it has been held in various cases. Even if approval is withdrawn retrospectively, deduction allowed before withdrawal cannot be withdrawn in regular assessment or reassessment or by way of revision under section 263. Issues in provisional registration or approval of charitable trust. So you know that provisional registration, 3 years. Madam, that Finance Act 2020, why? Always there was litigation between the department and charitable trust seeking registration before commencement of activities. Invariably, they used to come and tell you did not commence the activities, we will not grant you registration. Now nothing doing. They understood. Madam Nirmala Sitharaman, she understood. Now I wanted to purchase a land and building. So first I'll purchase land and building. I will construct that land and building. Within 3 years, I'll not be able to construct. No, within first year, I'll not be able to construct. I want to construct a hospital. It takes some time before the activities are commenced. Therefore, they told blindly you apply, I will just give you provisional registration. So within that 3 years, you try to commence your activities, etc. Then you apply for final registration. I will not question you at all. That is why I'm not questioning you at all. What is the purpose of provisional registration? I know you need some time to commence your charitable activity. Therefore, you want to start a hospital. I know you'll have to construct, you have to purchase a land, construct a hospital, go for all approvals, sanctions, etc. Then beginning your registration, begin your charitable activity. Therefore, I'll give you a provisional registration. Now, that is why Nirmala Sitharaman, if you see in her budget speech, stated that provisional registration in such cases shall be granted based on the application for registration made by the institutions without any detailed inquiry on the basis of the documents filed, even in cases where activities are yet to begin. However, organization getting provisional registration has to reapply for normal registration on commencement of activities, normal or final registration. Now, application for provisional registration has to be filed at least 1 month before the commencement of the previous year relevant to the assessment year from which the registration is sought. Provisional registration shall be granted for a period of 3 years from the assessment year from which registration is sought. Now, Income Tax 6th Amendment Rules 2021 have notified Form 10A for making application for provisional registration or approval. Now, what is the effective date of provisional registration? Application for provisional registration has to be filed at least 1 month before the commencement of previous year. Very, very careful, sir. Understand carefully. Application for provisional registration has to be filed at least 1 month before the commencement of the previous year. Your new trust is applying, sir, for provisional registration. For example, newly created charitable trust, or even the those trusts which have already applied. At least 1 month before the commencement of previous year relevant to assessment funds registration sought for all newly formed charitable trusts. Now the question arises, what will happen to cases where application for provisional registration is made during the previous year? It is not 1 month before the commencement of previous year. For this year, I should have applied in February. I did not apply. So now if I apply, what is the position? Now the question arises, what will happen to the cases where application for provisional registration made during the previous year? Section 3, defines the word previous year. Previous year means financial year immediately preceding the assessment year. Now, in light of the above, the statutory timeline for applying for provisional registration approval shall be as under. For existing charities that are yet to be registered, approved. Please understand, all existing charities that are yet to be registered or approved, application has to be submitted at least 1 month before the commencement of previous year, relevant to the assessment year from which registration is sought. For the new charity which has been incorporated or registered during the year, for all existing charities, you should have submitted at least 1 month before the commencement of previous year, relevant to the assessment year from which registration is sought. Now, for the new charity which has been incorporated or registered during the financial year in which the application for registration approval is submitted, the application for provisional registration can be made 1 month before the source of income itself comes into existence, and in such cases the application can be made within the same financial year in which the charity came into existence. For example, it is formed today or August or September or November. No problem is telling 1 month before that source of income, you please file it in the same financial itself, you can apply because it has come into existence during the financial year itself. Now, therefore, the timeline for submitting an application for provisional registration for existing charity which are yet to be approved, exemption provision shall apply from the assessment year immediately following the financial year in which such application for registration is made. Benefit of tax exemption shall be allowed only from succeeding financial year. Since the application for new registration has to be made at least 1 month prior to the commencement of previous year, relevant to the assessment year from which said registration is sought. Hence, it is implied that the charitable trust has to wait for a year to avail the benefit of section 11 and 12. Now, please understand the rule now. There is anomaly between the act and the rules. Act, we saw this one. You see the rules now. 6th Amendment of 2021, in case of an application made on subclass 6 of clause AC of subsection 1 or 12A, This is all for what, sir? For all existing charitable trusts which have applied for registration but still not received, or newly formed charitable trusts. Then provisional registration shall be effective from assessment year beginning on the first day of April 22. For all this, he is telling application, in case of an application made under subclass 6 of clause AC of subsection 1 or 12A during previous year beginning on the first day of April 21, then provisional registration shall be effective from assessment year beginning on the first day of 22. Thus the rule provides, see, this is the dichotomy or the anomaly between the rules and the act. Rule provides that any application submitted during the previous year beginning on the first day of April 21, provisional registration shall be effective from assessment year beginning on the first day of April 22. No problem. The above anomaly between the act and the rules may create confusion and therefore requires to be clarified by CBDT. Here is telling it will be applicable from 1st of April 22. Whereas here is telling timeline for submitting and provisional registration for existing yet to be approved. It shall apply from the assessment year immediately following the financial year in which such application for registration is made. Anyway, status of application, this is discussed. Pending registration application shall be considered as an application under new section 12AB, and hence applicant making such application not required to apply again. If you have applied in your February, January, etc., and not received registration, no problem. They are telling don't apply. You don't apply again. It will come within 1 month. 12A subsection 1 clause AC subclause 6 has not provided any rule. You are telling don't apply, but you have not provided any rule. It is deemed to be applied. They are telling not provided any rule as to how such pending application as of 1st April 2021 shall be treated as an application under new section 12AB, and how the same shall be considered by the PCAT while granting registration. Application of, yes sir. Now application after commencement of activity, that provisionally registered trust, you know that provisionally to renewal application from provisional trust to final registration should be made at least 6 months prior to the expiry of the period of provisional registration, or within 6 months of commencement of activities, whichever is earlier. So therefore, provisional registration, it has been envisaged only for the charitable trust which have not started any charitable or religious activities, and therefore in reality the provisional registration does not provide any tax exemption which will be available in any assessment year if the organization completes normal registration. However, if a charitable trust at the time of seeking provisional registration has already commenced charitable activity, then such charitable trust needs to apply for normal registration within 6 months of the provisional registration, as they have already started charitable activity. Now, what do you mean by the commencement of activities? Within 6 months of commencement of activities, whichever is earlier, the meaning of commencement of activities is not given in the Act. Therefore, you'll have to interpret. So one may, how to argue, one may give different arguments. For example, I have received donation, or the commencement of fundraising, or the commencement of receipt of donation itself is the commencement of activity. Or some may even argue, that some charitable activity has to be done. Then only it may be considered as commencement of charitable activity. However, application of the fund for charitable or religious activity should be deemed to be the commencement of activity itself. Application of fund, there is no doubt here. Application of fund of any charitable or religious activity shall be deemed to be the commencement of activity, and accordingly the timeline for submitting application for normal registration should be calculated for that 6 months. No power to cancel provisional registration. Yes, sir. Under the new provisions, power to cancel registration rests with the commissioner only in case the registration has been granted under clause A or clause B of subsection 1 or 12AB. Hence, the registration can't be cancelled by the commissioner where the registration is granted provisionally for 3 years. Now, these forms. So quickly we go through the form, this form 10A. So form 10A is for application or for registration or provisional registration or intimation or approval or provisional approval. Who can apply in form 10A? Application for revalidation of registration approval for existing trust registered approved on 12A, 12AA, 1023C, 80G, or application for provisional registration or approval under 12AB, 1023C, 80G for new cases. Timeline to apply in form 10A. already registered trusts on or before 30th June, or trust making application for provisional registration or approval 1 month before the commencement of the previous year, relevant to the assessment year from which approval is sought. To whom an application has to be made, either to PCAT or CAT authorized by CBDT. We discussed that CBDT wide notification number 30 dated 1st April 21 has now authorized Director of Income Tax CPC. Who are the registering authority, my dear friends? Director of Income Tax CPC Bengaluru and Commissioner of Income Tax Exemption Bengaluru for the following purpose: for receiving application for provisional registration or registration or provisional approval or intimation in 10A, for passing order under provisional registration or provisional approval or approval 10AC, for issuing all the URNs to applicants, cancelling the approval granted in 10AC and unique registration number. Now, what is filing of 10AB? Who can apply in Form 10AB? That is for conversion of provisional registration into regular registration, or your renewal of registration approval after 5 years, or for activating inoperative registration due to approval under section 1023C or 1046, or re-registration for modification of objects for entities registered under section 12AB. Now, timeline to apply in Form 10AB: conversion of provisional into regular at least 6 months before the expiry of period of provisional registration or within 6 months of commencement activities, whichever is earlier. Again, renewal of registration or approval after 5 years, 6 months prior to the expiry of said registration period. Activating inoperative registration due to approval under section 1023C or 1046, at least 6 months prior to the expiry of the said registration period, at least 6 months before the commencement of assessment year from which the said registration is sought to be made operative, and for re-registration for modification of objects for entities registered on 12AB within 30 days from the date of the said adoption or modification. Quickly we move forward. Yes, the 10A and 10AB shall be furnished only electronically under digital signature if the return of income is required to be furnished under digital signature. In other cases, it shall be submitted to electronic verification code. Verification of form. Application shall be verified by the person who is authorized to verify the return of income under section 140 as applicable to the applicant. Now, requirement of Darpan ID. Darpan ID, is all for the NGOs registration with Niti Aayog. For Darpan ID is for Niti Aayog, where it is mandatory for registration on Niti Aayog for receipt of grants under the schemes of various ministries, departments, government bodies, etc. So here Niti Aayog has developed a portal, NGO Darpan, to provide a space for the interface between NGOs, voluntary organizations, etc. And NGO Darpan portal has been started as an initiative of the Prime Minister's office to create and promote a healthy partnership between all the voluntary organization and NGOs and Government of India, and this portal is managed by Niti Aayog currently. Next, that requirement to file statement of donation, issuance of certificate to donor. Form for filing, 10BD, aggregation of amount, etc. 10B certificate will be issued 31st of May on or before 31st of May. Again, 10BD and 10BE, both what is the due date? Furnished on or before 31st of May, immediately following the financial year in which donation is received. Now, if the donation is received now, today, next year by 31st May, I should have filed. By next year, 31st of May, I should have filed that return. There is no question of quarterly return here. Next, Form 10A. Let us see the Form 10A, my dear friends, last 5 minutes before closing for question and answers. Now, what are the steps for filing and filling of Form 10A on the portal? Please log into the income tax portal. You know that www.incometaxindia.efiling.gov.in. Go to e-file tab. Click on the income tax forms here. Then you select the form name. Now we are selecting this. You put the PAN. When you put the PAN of the trust, many of the columns are auto-filled, my dear friends. So here assessment area you have to select. If you see these forms, this is just, when I tick the form, so many forms, I have to tick this Form 10A. Application for registration or provisional registration or intimation or approval or provisional approval. So Form 10A, when I put the PAN and select Form 10A, assessment year comes is 22-23 only. It directly comes to 22-23 only assessment year. So this original, etc. Now, Form 10A, yes. These are the instructions. Now, everything will be pre-filled. Everything is auto-filled. This one PAN, name, address, etc. Here we have just filled up JML, etc. Give the PAN, name, address, PIN code, etc. Then column number 2 here, section code, they will ask you. 19 sections are there. Tick whichever you want, 12A, etc. Subclass, this 12A, you know that everywhere, 1023C. Like how 12A, subsection 1, everywhere you tick whatever you want, 35(1). For everything, this Form 10 only is, I told you, 1023C, etc. Relevant section of the Act, you please tick. Now, nature of activities, you can select it is charitable, religious come charitable. So earlier, you know, my experienced professional friends should remember, earlier they used to give religious come charitable. Today they are giving only charitable or religious only. So here, whatever you would have received the certificates, no, in earlier days, there it may be really charitable, it may be religious come charitable. You tick the necessary column. Next, for constitution, whether you are a trust, whether you are a society, section 8 company, or still, you know, it was section 25, 1956, section 8 of 2013, others, whether. Next, 4A, whether application is established under an instrument. Yes, your, you know, your trust deed, etc. Society means bylaws of society. And then incorporation, date of incorporation for your section 8 company, etc. Memorandum of articles of association, etc. Give the date of incorporation, registration, incorporation number, etc. Authority, if the trust deed is registered there, sub-registered Shivajinagar, Bangalore. Objects of the applicant, you know that, 2 within bracket 15, whether religious, relief of the poor, education, medical relief, yoga, preservation of environment, preservation of monuments, advancement of any other object of general public utility. 7, you know, objects, 7 clauses were there in 215. Whether the trust deed contains clause that trust is irrevocable, yes. You have to write yes. Then now, whether the applicant is registered on Darpan portal or under FCRA Act, etc. If it is yes, you have to give these details will come automatically. You need not even bother. You know, if you write yes here, all these, when you write that PAN number itself, all these details will come, my dear friends, you know, auto-filled only. Registering. In fact, here others, you know, what appeal is there in case of a trust? Some intimation is passed, some order is pending in appeal, some assessment order is passed. Everything comes here. You have to delete everything and keep only necessary things. Now, earlier, if the application made by the applicant has been rejected, you have to write yes or no. Nothing to worry. That whether exemption you have claimed and 10 in bracket 21, yes or no. Then details of all key persons you have to give here. Your author, founder, settler, etc. All this. Trustees, author, founder, settler, etc. Relation, name, etc. All these details you have to give. ID code, this permanent account number, 9A, this. It goes like this. So, this is a long, you know, column. Many columns are there in this 9A. Therefore, next slide, I'll take you again. All these details they are asking: name, relationship, now permanent account number, etc. Yes, where is this premises? Vaikuntham 999 example, Balaji Road, Main Road, Tirupati. All these details. Andhra Pradesh, state, country, pin code, mobile number, email address, etc. Now, details of all assets and liabilities. See, column 10 to 19, my dear friends, only if yes, then only, suppose has the return of, be careful, this column number 10 has return of income filed for last assessment year for which due date has expired. If you write yes, then my dear friend, you need not file all these details. 10 to 19, don't file at all. If you tell 10 yes, then you need not file. All this 11 to 19 column will become gray and no need to fill the details. So, which return you have to fill? Last assessment year 2021. Simple. Assessment year 2021. If you have filed the return, if you write yes, then all this column need not be filled. Finish. Otherwise, corpus, fund, long term, other liabilities, total liabilities, land and building, other fixed, etc. Suppose if this is no, last year's return you have not filed. If you have not filed last year's return, then I am afraid you have to give all these details. You need to prepare a balance sheet as on the date of filing of application under section 10A. In form 10A rather, not section 10A. On the date only. But in case last year's return is filed, you need not worry. All this will become grey. It will not allow you to file details at all. Don't worry at all. Suppose no, that's what I told you. If you write no, then it will tell you, you provide me all these details. Give me details of corpus, funds, reserves, long-term liabilities, other liabilities, total liabilities, land and building, etc., etc. Give me all the details. So fill up the balance sheet figures as at the date of application. Next, income received 20, income received in previous years, immediately preceding the previous year in which application is made. All about the grants received from your central state government, grants received under CSR, etc. Whether the fund or these are all for religious trust, fund or institution incurred any expenditure of religious nature, these last two columns. If yes, provide details of 3 preceding years also in which application is made. So this is the last column of this trust. Now verification. I told you under section 140, who are as you have to verify. In case I so and so, son of so and so, declare that the details given in the form are true and correct to the best of my knowledge and belief, etc. In the trustee, my PAN, etc. Write name, place, and date, and preview and submit, save draft, and then you have to. Moment you do preview and submit, it will show this. What are the attachments? All attachments together should not exceed 50 MB. Should be in PDF format only. If any of the documents are available in vernacular language, you are requested to upload translated version of the document, failing which the application would be rejected. Please understand. This is given, this is as it is taken from the portal, sir. When I save the form, when I fill up the 10A, then when I keep it ready for uploading, this is what it shows attachment. All attachment cannot exceed 50 MB. All attachments should be in PDF format only. If any of the documents are available in vernacular language, you are requested to upload translated version of the document. Suppose the deed is in Malayalam language. They are telling what? Upload translated version of the document, failing which application would be rejected. What are the attachments? There are 6 types of attachment, my dear friend. 1 second. Yeah. Self-certified copy of instrument creating the trust or established institution if applicable, your trust deed, etc. Bylaws of the society in case society, all your incorporation documents in case of section 8 company, etc. Now, self-certified copy of document evidencing creation of trust, established institution if applicable. Now, this is, if evidencing creation of trust or establishment if applicable. Document. Suppose there is no instrument, then you have to attach a document. Self-certified copy of registration with ROC, registrar from societies, registrar of public trust, etc. Self-certified copy of registration, FCRA certificate here, etc. Then your existing order under 12A, 12A, existing certificate 12AB. Similarly, is telling self-certified copies of annual accounts of the trust or institution relating to prior year or years not being more than 3 years immediately preceding the year in which application is made, for which the accounts have been made up. Click here to upload vernacular document. Clearly it is given, sir. Where is the question of confusion? Clearly click here to upload even vernacular document. Then submit. Click here to download the preview. After I click this, this is the acknowledgement I get. This is the acknowledgement number. My office uploaded, and this is the acknowledgement I have taken for you here. Clearly it comes, sir. Form 10A, Rule 17A. Please. This is all the acknowledgement number. It comes. Everything comes here. This is all it comes. So I have completed my presentation now. You can now, you can go for, this question and answers. Thank you for, patiently listening to me for more than 2.5 hours. Thank you very much, sir.
Thank you, sir. Any member wishing to take any question, please put it in the chat box.
Many questions have come in the chat box, sir.
Where is it, ma'am?
Sir, if you open the chat box, you'll be able to see, sir.
One more, no?
Yes.
More. Where is the?
Sir, one Mr. Salim has sent the first query.
What, ma'am?
Sir, one Mr. Salim has sent the first query. Shall I read out, sir?
No, where is it?
Sir, in the chat
The
box.
chat, sir, you can please
Chat
click
box.
in the chat, sir. The general chat.
Chat. One
Okay.
second here. Salim, no?
Yes, sir. First one.
Yeah. See, the question here is, can I start a charitable trust with my relatives as trustees and claim tax exemption or donations made by me to the charitable trust? I want to avoid all such so-called charitable trusts which are not utilizing the corpus of the fund, not for charitable purpose, but for their benefits. Why not? You start. You can make a charitable trust. You prepare a trust deed. You register the trust deed, form a trust deed. It should be for the, obviously for the objects of the trust only. For the objects of the trust only. And you can go for the registration and approval. Take care, my dear friend. Now, the department, when you make the trust deed, these 5 clauses should be there in the trust deed. First, irrevocability clause. Second, exemption, irrevocability clause. Then, accounts clause, investment clause, beneficiary clause. So, all these clauses and then amendment clause. All these 5 clauses should be there in the trust deed. Very careful. Irrevocable, you have to be there. It is not there. You please modify the trust deed, make amendment to trust deed. Irrevocable clause is a must there, because the section itself, 11, starts with notwithstanding anything subject to 60 to 64. So if it is a revocable transfer, then you are not going to get exemption. It has to be irrevocable. Incorporate all these and then you can definitely do your charitable activities. Shall we, Mohan Kumar, shall we amend the existing bylaw and upload the new bylaw? Yes, sir, obviously. See, if the conditions, see, what are they telling? Conditions do not confirm, that modification of objects do not conform to conditions of registration of charitable trust. Then only you have to, apply for fresh registration. But all the trust deeds per se, you have to upload. There are registered trust deed, again amendment made to trust deed, one more amendment made to trust deed, one more addendum, all of them you have to upload it. Can you share presentation? Yes, sir, we will do it, no problem. If a trust received a notice from any of the government departments stating that some violation of some provisions but subjected to appeal, shall that be tantamount to non-compliance? Not at all, sir. The question here you are telling me is very good question. There is a non-compliance of other laws. If there is a non-compliance of other laws, the trust will lose registration under the Income Tax Act. But the question is telling is it's subject to appeal there. So therefore, no problem. It is subject to appeal there. Final order is not passed, or final order may be passed in my favor also. So there is no problem, sir. Your registration is safe. Then Mr. Ganapati is asking a question.
Sir, one question you have missed, sir. Shall we amend the existing bylaw and upload the new bylaw? Mr. Mohan Kumar has asked.
Yeah. Shall we, Mohan Kumar, shall we amend the existing bylaws and upload the new bylaws? That's what I told you, sir. If the conditions, what did I tell you? These conditions are there for registration of trust. Modification of objects should pertain to conditions of registration of the trust itself. If it is not material for registration of the trust, then don't bother. We need not upload it. But whatever amendments are made to the charitable trust by way of trust deeds and addendums and other trust deeds, etc., you upload everything at the time of registration. If the trust has made application for registration on 12A in December 20, January 21, not disposed of CAD, sir, discuss, sir, 12AC, 12A, subsection 1, clause AC, subclause 6. Remember this section again, I'll repeat again. The question is, you are already applied for registration December 20 or January 21 and it's not disposed of by the CAT exemption. Whether the question is, Ganapati is asking whether I have to apply again or not. Or old application will be considered. Absolutely, sir. We need not apply for registration at all. Which is the section 12A, subsection 1, clause AC, subclause 6. It shall be deemed to have been applied. Within 1 month, you will get your registration. Now, they are not issuing certificate. They are sending that registration number through your mail. Registered email ID. Please check that. Next is queries. Yeah. Form dash for application of renewal of registration 1023C4. Application under section 1023C4 pending on 31st March 21. Whether fresh application is to be preferred. Whether re-registration is required for institution already registered 1040. Sir, I told you there is nothing to worry, sir. For 1023C, for intimation under 35, for 12A, for everything, there is one, specific form only, which is 10A only, ma'am. There is no other form now. 10A only you have to apply. It is a one consolidated form and you have to apply 3 times. If you want 10A, once you apply for 12A, again 10A you want to apply for 80G, again 10A you want to apply for 35, again 10A you have to file for 1023C. So there is no problem there. 1046, I told you, 1046 you have to apply. Suppose, based on the proviso under 11.7, first proviso, second proviso, further proviso to 11.7. If suppose you are registered on 1023C and 1046 and you want to come back under 12A, 12AB, then you have to apply again. 6 months, from the end of the financial year. Is 80G amendment applied to corpus donation? What is 80G amendment? Sir, this 80G amendment anyway, 80G is for what? It does not distinguish, no. Anyhow, when you are giving corpus donations, you are giving donations. If the trust is receiving the donation, clearly they are telling whether it's corpus, whether non-corpus, whether voluntary contributions, you have to give the details there. Otherwise, then nobody will give the details. They will tell everything, this is corpus donation. I will not file at all, they will tell. I will not file the statement of donation at all. It is not possible. Restriction, Mr. Rahul Krishnan, restriction on application out of loan and borrowing, trust paid loan or borrowing using accumulated funds or corpus fund. Not possible, sir. Absolutely not possible. You have to repay the loan only out of the income of the current year. You can't pay out of the accumulated funds or corpus. Can I show it as application of funds, sir? You discuss that payment of loan or borrowing should be paid via income. Yes, sir. It is out of the income of previous year only. It is not allowed, sir. Whether 2 separate application form 10A is to be filed. Yes, I discussed 12A and 80G. You have to file separate application. What is the purpose of filing audit report 1 month prior to the filing of return by a trust? Whether return can be filed along with audit report. See, what is the question asked now? He is telling 1 month before, there is time. 1 month before you are telling me upload the audit report. 1 month time you are giving me to upload the return of income. What is the logic? Why is the financial brought? My dear friends, what are they doing nowadays? They are giving you all the information on the portal, high value transactions, significant transaction. Now wait and watch, mark my words, from next month onwards, lot of trusts, not only other associates, even lot of trusts will be receiving notices under 148 for income escaping assessment. Already lot of trusts would have been received already. You please understand, this year scrutiny notices 143.2, they have drastically reduced. Why? Because 148 have increased drastically. So wait and watch. Lot of notices will be issued under 148. So why this is done is, they are telling you first file the return. We will take all the information. All the information will be with the department and they are going to upload it on the portal under significant transactions and high value transactions. Then, sir, is there any provision for condonation of delay? Absolutely, sir. As of today, there is no provision for condonation of delay. By 30th of June, if you don't file for registration of the trust, then you will the registration will become inoperative. As of today, there is no provision for condonation of delay. If there is omission to file, the trust becomes unregistered and not eligible. So that is what now we will have to wait and watch after 30th June. Earlier, what we were doing, suppose return is not filed, there are 6 notifications, 6 board circulars issued. 16, 17, 17, 18, 18, 19, 19, 20, 20, 21. For example, last 3-4 years, there are 6 board circulars have been issued. Condonation of filing, delay in return of income is there. But for filing application, there is no board circular as on date. That too, if it is more than 1 year, sir, more than 365 days, I have to file application for filing return condonation with CBDT. Less than 1 year delay, I can file it with Principal Commissioner of Income Tax Exemptions. Devarajan, sir, is next. If an associate is engaged in running a hospital, also medical college, possible to get registration under both subclasses of 10, that is hospital and educational institution. Acha, the 1023C, 3AD and 3AE, why not, sir? Absolutely no problem. But overall aggregate cannot exceed 5 crores. Whether a company, not Section 8 company, but doing charitable activity and is fully financed by government is eligible for registration 12AB. Absolutely no, sir. It is not a Section 8 company. You are doing charitable activity. It is fully financed by government. Eligible for 12AB, not at all possible, sir. You'll have to go for 1023C, class 4, 4A, 5 and 6. 4, 5, 6 and 6A. 4 sections are there. Because what is there? You are engaged in charitable activity and substantially funded by government. That means 50% should be, by government. There you can claim. Whether education institution covered on 2023 3AB institution substantially finance required to register 12AB, or they may simply file return avail benefit. Sir, if it is less than 5 crores, absolutely don't worry, sir. Less than 5 crores, please file the return under ITR 7. Don't bother, no tax audit report, no 85%, nothing required, sir. If it's more than 5 crores, then my humble suggestion is go for registration under 12AB. I repeat again, if the gross receipts of the education institution less than 5 crores, then no problem. You go for 1023C. More than 5 crores, kindly apply for registration on 12AB. How to open FCRA account and get FCRA approval? Sir, this FCRA, I think SBI Delhi only you can open, no?
Yes.
How to open FCRA account and get FCRA approval? That is as per your Foreign Contribution Regulation Act 2010. I have not had an occasion to go through the amendments there, but I think it is only in SBI New Delhi only. But now because of the pandemic, they would have made an exception here. Whether applications required for institutions registered under 2023 3AB, I told you, sir, it is only for, yes, it is only for 2 persons, registration not required. For whom? 1023C, 3AD and 3AE. Rest all, if you want to file, you know, if it's less than 5 crores, more than 5 crores, you have to go for approval, and rest of the 4 not required. Sir, if you are substantially financed by government, then not required. Whether to apply, when to apply for final registration by existing trust after applying for provision. Sir, that is 3 years before 6 months, from the expiry of 3 years, or within commencement of activities, within 6 months of commencement of charitable activities, whichever is earlier, you please apply for final registration. Is renewal fresh application required for section 1023 BBA cases if an institution created by enactment? Not required, sir. This is only for 12BA. 12AB rather. What is the way forward for charitable institution which has been in existence for past 2 years but not yet registered? Sir, now you are going to face problem. See the question, Shyam Shekhar, very important question. Way forward for charitable institution which has been in existence for past 2 years but not yet registered on the IT Act. If they take registration now, whether exemption will have retrospective effect? Listen carefully, very important question. After 1st of April 17, all my lectures have told, sir, after 1st of April 17, nothing doing, sir. If you are an unregistered charitable trust, gross receipt will be taxable under 56 to 10. 56 within bracket 2 subclass 10. Everything will be taxable, sir. No question of even deduction. Gross receipt will be taxable. Before that, 1417, there was a proviso under 12A, and then it was telling that merely because of non-registration of the cases, earlier cases will not be opened garke. Merely because of non-registration of charitable trust. Now it is not possible, sir, after 1st of April 17. Now you are in a problem. Department may reopen the cases. 148, definitely they may reopen, because 56 to within bracket 10. Gross receipt will be taxable, sir. More than 50,000 rupees, you know that. Now you apply for registration, no problem, but you will be given only from this year onwards. What is this? Mr. George Jacob, for society registered as a charitable trust under Society Act and newly applying under IT Act, whether all conditions of a trust must be satisfied in the MOA. Naturally, sir. Absolutely. That's all, ma'am.
Yes, sir.
Okay.
Okay. Thank you, Naveen, sir, for the excellent presentation and enlightening our members on the subject. Thank you once again for happily accepting our invitation to be the faculty in short notice. Thank you, sir. Now I request Secretary Rama Sharma for the formal vote of thanks.
Thank you, Chairman, sir. Respected Chairman of Thiruvananthapuram branch of ICAI, CA Ramesh Kumar S. Our speaker for the session, CA Naveen Khariwal ji, and my dear esteemed members of Trivandrum branch. A very good afternoon to all of you present here. It gives me immense pleasure to express my heartfelt thanks to our faculty for the session, CA Naveen Khariwal ji, for walking us extensively through the various amendments and the re-registration area of charitable trust, and also showing us practically on how to submit the forms. The number of participants crossed over 100 in Zoom, and around 20 to 25 were watching through YouTube as well. So this makes us understand how valuable session yours was. So thank you so much, sir, for the elaborate presentation of this very complicated topic. Thanks a lot. Next, I thank all the members of our branch for making this seminar a grand success. We had a record number of participants, as I mentioned earlier. I'm sure you all have had a great value addition from this particular session. Thank you so much for your overwhelming participation. So let us now conclude by thanking God Almighty for keeping us all safe and to face another day and hoping for a better and brighter tomorrow. Requesting all to stay at home and stay safe. You can call, like the chairman said initially, you can call any of the members in the COVID task force in case you need any help on any kind of issues related to COVID. Loka Samasta Sugino Bhavantu. Jai Hind, Jai ICAI. Thank you so much.
Thank you, sir.
Thank you.
Thank you, Naveen sir. Thanks a lot.
Bye-bye.